This up. So, yo, what is up for everyone watching this on the YouTube replay? Hope you're having a great day. And some of my portfolios are doing really good, some are doing really bad. So, let me give you a quick portfolio update. Full disclosure, I am drinking a Monster Energy right now. Now, I was at the dollar store with my friend and I just saw a Monster Energy drink there. And I'm like, hey, let me buy it. And this one is it's like Aussie lemonade, and it literally tastes terrible. It has 92% of my daily sugars, and it's not good, but I'm still going to drink it. But anyway, let's give a quick portfolio update. Here's my main dividend account. We're down 0.88%, but yeah, hopefully this Monster Energy will give me the energy I need because I'm a little tired, but let's wake up because the market's doing stuff right now. So yeah, our main portfolio, our dividend only account is down 0.89% on the day. And here's how all our stocks are doing. Really only McDonald's and Google are green. Google is actually, I think it hit a new all-time high today, but it's slightly gone down since, but I'm pretty sure Google hit a new all-time high today. But yeah, here's my total percent change on every stock. And here's what's crazy. Look at Constellation Energy. We're up 93%. That's really led to most of the gains. And that's why we're literally at a new all-time high in our Robinhood portfolio. So that's great news. And not just on this account. Well, actually, our Roth IRA is still a bit off all-time highs. But yeah, our Roth IRA is up 13% all time. We started it pretty much exactly a year ago. And these are all the stocks that we own in here. Oh, you know what? I'm going to do this live on stream right now. I want to buy more CorMedix. And as much as I love this company, I want to stress that you can't make this a meaningful size position in your portfolio. But let's go ahead and place in an order to buy one share of CRMD. Hey, what up, Looney? Okay, yeah. What is it telling me? Okay, order just. Oh wait, I just did it at $11. Okay, I just did something really dumb, guys, and I'm actually glad. Oh my goodness, dude! I placed a limit order in at $11.16, and the stock is $10.16. I almost a good thing I did a limit order, but I mean, I almost just overpaid by $1 for the whole stock price. Okay. Yo, what up, Jay Barrow? Yo, we'll look at Qubits. I don't love Qubits, but that's a huge momentum name. But on the good news, what up, Looney? What up, Johnny Nine? Yeah, we'll look at CCCX. I think that's the, okay, we'll get to those here. But yeah, this is our Mumu portfolio, new all-time high today. A lot of our OGs have been doing amazing. Coca-Cola consolidated. Check out the rally they've had the past couple months here. So that's amazing. Yeah, hey, someone said, how is bro up? Well, hey, as soon as we get to our Weeble portfolio right here, well, hopefully it doesn't show my password, but yeah, we are down 1.78%. So when we blend all our portfolios, I kind of look like everyone else's portfolio today, but this portfolio specifically, I have a different goal with each portfolio. This one specifically, if you look in the top left, it's called my buy and never sell portfolio, because once I buy a stock in here, I try not to ever sell it. And literally every stock is up in here except Amazon. Amazon is slightly down on the day. I am actually looking to buy more Amazon. Oh, yeah, I got to give an update on Progressive. Down to DCA into Progressive? Absolutely. You know what? Please remind me to look at them. Like, I need to look at them. I don't want to forget. My husband accidentally bought Bloom Energy when he meant 17 shares when he meant to buy one share at 17. Now he's up. Well, hey, look like that unfortunate event made you some money. So check this out right here. Here's our Weeble portfolio. We are down 1.8% on the day, but if you look all time, we have underperformed the S&P, but I just like being fully transparent. Our open profit and loss all time, we're up 19% all time. Here's our winners and here's our losers. So yeah, we have some big losers like UiPath, Zoom. Sprouts Farmers Market has been kind of recovering, but they're down another 3 on the day. And Progressive Corp. So Progressive Corp actually reported earnings and they missed on expectations, but the year-over-year comps are incredible. Like they still grew like 20% year-over-year. We'll go dig, or the net income did. We'll go check that out in a minute here. But yeah, here's our Weeble account. This is kind of like our risk on portfolio. I got a lot of risky names in here like AMD, Robinhood, SoFi, Reddit, Super Micro, Power Solutions, Clear Secure. A lot of these are like fun money positions where I only put in a couple $100, but some of them are my biggest regrets. Like I regret every share I've ever sold of Robinhood, every share I've ever sold of SoFi. Kev said, did you just buy some CRMD? I did just buy some CRMD. Yeah, hey Jack, what up, dude? Remind me to look at ABAT. What's up, dude? And we got to get to Amazon. There's a lot of stocks I want to get to today, and trust me, we're going to be streaming for 2 hours. So we'll get to all of these. So here's Progressive Corp, and I like to be really quick. I only spend like 1-2 minutes on each stock, or not even 2 minutes. So here's Progressive Corp. They just reported earnings, and here's why I'm actually looking to buy more of this company on the dip. So here were their actual numbers. So they missed on revenue, they missed on net income, and that we don't get the EBITDA numbers, but is it loaded? Wait, Q3. Oh no, it hasn't loaded in the numbers down here yet. Oh well. Well, either way, this EPS of $4.40, if we compare that to the same time last year, it went from $3.97 to $4.40. Like I'm still super happy with that. That's still over. They still made $2.5 billion in net income this quarter. So Progressive Corp, they have a nice dividend rule too. So, so for this CCCX stock, oh hey, what up? Oh, we got to look at SoFi too. I love that one. I think this is some quantum play, some capital group out there. I forget the name. Yeah, Citron. There's an investor group called Citron, and they say this is the ultimate quantum stock of like all time. He posts on X like buying CCCX against any position in RGTI. Anyway, I haven't done much research on this one because if we go to their numbers right now, they just went through some acquisition. If we look at their balance sheet from this quarter to last quarter, I mean, when it went from 170K to 400 million. So something happened this quarter. I don't know what. I think they acquired a quantum asset. I don't know, but yeah. Hey, what up, Hendrik? Hope you're doing well too, man. Or Henrik, what up? I made a small position on CRMD the other day. Hey, nice. I actually just bought one more share today. I lied. I've bought like 4 shares today. I bought some before I went live because I still have a bit of cash. I got 120 schmeckles of cash in the middle here. And here we go. Oh, wait. CRMD, today is the 16th. Yeah, these are all buys today. Actually, I've bought 1, 2, 3, 4, 5, 6. I bought 7 shares just today. So you can just look at all my buy orders here. This is what I recommend, if you really like a stock and you want to buy it, instead of spending all your money at once, like I started very small. I only started with literally $100 and I bought my shares at $14 a share. Well, since I dollar cost averages and didn't spend all my money at once, I'm now buying shares much lower at $10 a share. And I especially recommend it in this environment with everything, at all-time highs. Tough to buy some of these valuations. Like people, let's go look at SoFi right here. And I wanted to get to LAC. Oh, hey, heck yeah. Yo, no way. Yo, shout out to the homie Bob with the $1.99 super chat. No way, dude. Hope you're having a great Thursday. You just made my Thursday. Thank you so much. We'll definitely get to both of those. And we'll also get to Taiwan Semi here, but let's get to SoFi. I saw a couple comments here. What happened to SoFi? Someone said, what app is this? Yeah, hey, by the way, if you want to get this brokerage I'm on, it's in the link tree in my bio. First link there. It's a software where you buy stocks on. Full disclosure, it is an affiliate link, so if you deposit $100, we'll both get some free stocks. But anyway, for lowest fee brokerage, no fees, no commissions. But let's pull up SoFi right here. One of my favorite fintechs out there. Full disclosure, I do own SoFi. I own like 24 shares of this company. So crypto market downturns. I mean, I don't think there's any news today. Like if you just zoom out kind of on the daily here, like this just looks normal. This is a normal day for SoFi. Again, they trade at 70 times next year's net income. So I'm not shocked that, they're having a little healthy RSI retrace, as I like to call it. But here's why this one definitely deserves a multiple, and they deserve a spot. I own this company, full disclosure. If I go over to my Weeble portfolio, I'm ever sure I've ever sold a SoFi, but I have 24 shares left of SoFi. I bought my SoFi. I know a lot about them. We've owned them for many. This is where I bought all my original shares. So anyway, SoFi, they're a fintech. They have their own banking charter. They got it through a loophole that's patched because of them. If we specifically go to their financial services, this is what justifies the high multiple on this company. Because they are expensive. Again, 80 times next year's net income. It's tough to pay, but here's what's kind of justifying it. I mean, there's a lot of momentum stocks right now that their numbers don't justify the stock price appreciation, but this one is why I wouldn't trim SoFi here. The revenue is up 105 after it grew 80, after it grew 222. So, I mean, just incredible growth. And people I think are just really taking them serious. They're easily making net income every quarter. They made 100 mil in net income this quarter. Out of 850 mil. So great numbers on SoFi. And they're beating on every analyst expectations. This orange line right here is what the analysts expect. Every quarter they beat on revenue, they're beating on net income and on EBITDA by a huge margin. And that's why they're gapping up so much on earnings report day, because it's a triple B quarter every quarter. So that's why I own that one. I'm totally biased, but I put them on the watch list. I think that one's a nice growth name. They're not just some like startup momentum-y trash. I love that company. How about Progressive? Progress. Oh, you mean Progressive, Bog? Yeah, hey, we just looked at Progressive, actually. So let me look at LAC right here. This is Lithium Americas. Then we'll get to APLD. I love APLD. So, yeah, hey, no problem all. What's up, man? So here's Lithium Americas. They're down 21% on the day. Whoa. Whoa, JP Morgan downgrades Lithium Americas to underweight with a $5 price target. Again, the stock is $7, so that really crushed it. Here's what I found really like a huge safety net about Lithium Americas, what I specifically love about them. If you go to their cash right now, if you look in the top right, they have $500 million of cash and no debt. 500 million of cash and no debt. The whole company's worth 1.84 billion. So that's easy math. 26 whatever percent of the entire, 20% of the entire company is, just their cash on hand. Again, I can see like if we go to the revenue right now, it says no data because this company again is still, they've never sold anything. They just own a lithium mine deposit. What the government just did is the government took a 10% stake in this company. U.S. government takes strategic stakes in critical mining companies. Basically, China's being really strict on their rare earth mineral exports, making the permitting process now very hard. And we need these rare earth minerals. So the government literally took stakes in these. They will not allow these companies to go bankrupt anymore, like MP Materials, LAC. That's why they're also taking a stake into Intel. We got to be more manufacturing independent. Now, I wanted to pull up here so APLD as well. So that's actually a stock owned by Nvidia. So if we go to the Nvidia portfolio right here, Nvidia owns CoreWeave, and their second largest holding, 85% in or 82s in CoreWeave, but 7% of their portfolios in APLD. Now, again, I wouldn't just own a stock because Nvidia does. You always want to go do your own research on it. Is it a good, fundamentally sound company? And I think so. They're in the data center hosting business. It's really popular right now. But specifically, they reported earnings literally 2 days ago, or 2 trading or candlesticks ago, or 4 candlesticks ago. Anyway, the reason they gapped up so much on earnings and why it makes sense that they did is because look at this huge beat on revenue. Analysts expected 45 mil and they reported 64 mil. So that was really a good quarter. And look at the EPS as well. The EPS is net income. They lost, the analysts expect them to lose 13 cents of EPS. They lost half that. So no wonder they're up so much. What happened? Yeah, hey, what up, Billy? Yeah, by the way, this is a brokerage I'm on right now. It's where you buy stocks on. If you want to get it, it's in the link tree in my bio, very first link there. It is an affiliate link, full disclosure. So if you go and deposit $100, we'll both get some free stocks. But yeah, my favorite lowest fee brokerage out there. Someone said Amazon. Yeah, let's do Amazon. I do own this one, and this is in my never sell portfolio up here. I'm literally so close to buying another share. I mean, should I do it right now? I'm tempted. I got paid. I'm so happy. I got paid today, basically $1,200, and it hits my bank account tomorrow, and I'm going to be depositing all that in stocks, so I can't wait. But anyway, Amazon right here, a lot of people don't know this, but they're really a cloud play. Their AWS is the most valuable part of the company, their Amazon Web Services. It's over $100 billion of annual revenue. And, they don't make too much net margin, shipping you a package overnight, 1-day shipping. They really make the net margin on that. That's their high margin business that brings the most to their net income and bottom line. Check this out. Here's what I love about Amazon. I mean, they're easily making 15 to 20 billion of after-tax net income a quarter. And look at this growth rate. That's what I love about Amazon. It's up 34%, 64, 88. That's insane. They're deleveraging their balance sheet. One thing I applauded Amazon was not taking on debt right now like a bunch of other companies, but Amazon actually just issued some debt. So that I didn't love. They also just did some layoffs, they let off. Yeah, look at that. Amazon to cut off 15% of HR staff. And what I think is maybe AI can replace, maybe they can function with 15% less people utilizing AI. I don't know. But look at this. Bezos reduced stake to Amazon to 9% from initial 43% IPO share. So basically, for the first time ever in history, Jeff Bezos now owns less than 10% of Amazon, which is pretty interesting. But look at that. He owns 9%. Again, if you look in the top right here, he owns 9% of a $2.29 trillion company. I mean, whoa. Hey, what up, Gent? He said ISSE. What up, Ed? Less policies. What up, Ed? PGR tanked after earnings from less policies written. Oh, okay. Yeah, hey, we'll go over them again. I definitely want to go over them. So this is ISSC. Innovative Support and Solutions are a very small company, but here's what actually interests me. They're on my watch list. Here's why. I normally wouldn't talk about these kind of companies because if you look in the top right, they're only worth $198 million. That's a very small market cap, $198 million. But here's the thing. Out of all the $198 million market caps out there, I like this one because look at this. They're actually making a couple million of net income every quarter. They're profitable every quarter on net income. So that's why I think this one isn't just some hunk of junk. Also, the growth. This is the other part. Look at the growth of the revenue Revenue's up 105. Last quarter was 104, 70, 18, 50. Like the revenue just hits a new record every year, every quarter. So that's why I actually like that one. They're on my watch list. I wouldn't make it a huge size position. Hey, what up? The homie Josh is here. I took a 4K position in ENS, Powell, and a couple other grid stocks. Yo, Josh, dude, Powell has been on fire. Oh, hey, if you're looking for another electrical grid stock, Eaton, Powell Industries and Eaton usually, they don't trade exactly together, but they usually rhyme together. Like whenever they always go up and down kind of in the same rate, but Powell Industries obviously has been more growthy. Yeah, I love this industry, really benefiting from the AI tailwinds. Powell nearly at an all-time high. I can't believe it. So thing is, I just full port Nvidia options. Yo, good luck with that. I'm not good with options. Also, my newest stock, by the way, is actually Ferrari. What do you think about that, Josh? I decided to nibble on Ferrari a little bit. You know, again, as much as I love them, I'm only going to keep them at 3 shares. I'm in this market. You got to be super patient to make something a meaningful size position. So I'm starting super slow here. But the reason I like Ferrari is we've converted the currency from euros to USD. You know, they're easily making 400 to 500 mil in net income a quarter. What are they doing with 400 to 500 mil of net income a quarter? Well, check this out. They didn't do any share buybacks this quarter, which I actually like because the stock was at all-time highs. But all the other quarters, they're always spending hundreds of millions on share buybacks a quarter. So not only do you get the buybacks, but you also get a dividend, 0.9% dividend. But look at it. Here's the power of the share buybacks. If you go to the net income is up by 12.8. So net income's up by 12.8, but net income per share is up by over 14 because the share part of the ratio went down. Pretty cool. So Henrik said, thoughts on Zoetis. Yeah, dude, Zoetis is one of my favorite animal healthcare company plays out there. That's actually at a fair valuation. So check this out right here. If we go to their PE right here, this is their, PE is just net income multiple plus any share buybacks or dilution. They trade at 24 times net income. That's because the growth has slowed down. If we go to the revenue, 4%, 1%, 4%. So, mid-single digits. But part of this declining revenue growth is actually because they sold off an asset. Now, it says the cash from investing activities was only 126 million sold of assets. They actually sold like a part of their business for 600 million, but they also invested. So it blends the two together. But basically, they sold off one of their low margin like prescriptions, animal healthcare. Basically, this is a huge parasiticides company. That's their large segment. Vaccines, dermatology, anti-infectants, pain and sedation. Like if you ever look at a cow and see that like white like circle on his ear, that's actually like a flea repellent. It like spreads like tick repellent all over its body. And Zoetis is the one that actually sells that. How do I know? Because my granddad actually was a salesman for them. And he was telling me about it. Okay. Consumer brands and cars are not my specialty. I've heard good things about them. Yeah. Hey, you should watch my YouTube video about Ferrari. I think this Ferrari is a bit immune because a lot of companies aren't able to raise prices. Like right now, if they have tariff or inflation, input costs to the company, most companies can't right now bring that price or raise prices on consumers. But I think Ferrari is in a bit of a different ballpark where if they raise prices 10%, their customers don't care. I mean, a lot of their car, if you try and buy one of their new cars right now, they're backlogged for like 2 years. You can't even get the Ferrari. And 15% of the revenue comes from sponsorship revenue. A lot of companies pay Ferrari a huge amount of money to sponsor them to be on their cars and to network at their races because that's where all the high net worth individuals are. And it's so hard to market to those people. And so people like AMD pays Ferrari a bunch of money. Okay, so let's keep going here. Ooh, someone said, Wombat said, I need advice on Iron. I got a buddy in a 19 and now he's wondering, yeah, Iron, this one is definitely overvalued, but I can totally see why the stock is doing so well. They deserve to be doing this good. Hey, nice job. Hey, by the way, they are a European company. So, hey, no way. Shout out to the homie Maddie on the YouTube stream with the 25 Ron. No way. He said coffee. Yo, actually, I don't got a coffee. I got a Monster right now. And it actually does not taste good. I just needed some energy. I was at the dollar store with my friend and I saw this and I'm like, hey, why not get it? It has 92% of my daily sugars and it doesn't taste good. Okay, so here's Iris Energy. Here's what justifies this major stock price appreciation, in my opinion. We go to the revenue down here. I mean, this is insane. The revenue's up 230 after it grew 104. Like the revenue just hits a new record every year, every quarter, and it's growing tremendously. Like that's insane. So 200 or it's up 229%. And so not only are just the top line growing like crazy, but also the bottom line. They used to lose net income, but now for the past 3 quarters, they're consistently making net income every quarter. So they grew out of those losses. That's great news. So I can totally understand why Iris has been doing so good. But would I buy them here now? No, I wouldn't buy them here now, but I maybe put them on the watch list. I can certainly see why that one's doing so well. It deserves it. Lucky, he said MP Materials. Yeah, so this is another one of the stocks, kind of like LAC, where the government is taking a stake in them. Actually, I like MP Materials because they're actually opening up this one rare earth mineral mine that's going to supply the U.S. for the next 50 years of certain rare earth minerals. So that's pretty cool. Let's see. U.S. government makes $400 million strategic investment in MP Materials. Yep. So, yeah, basically they can't go bankrupt anymore. The government just won't allow it. So, yeah, there you go. Rare earth mineral play backed by the gov. Thanks again, Maddie. He said, what about Intel? So speaking of, all the government stuff, this is another one. Hey, why is the government, I think 5 to 10% stake in Intel? That's because if you didn't know, NVIDIA right now just designs their chips. NVIDIA designs their chips, and all of NVIDIA's chips are actually manufactured in Taiwan, 6 feet away from China. They're actually manufactured by Taiwan Semiconductor in Taiwan. And basically, we can't have that if we go into a war or something, like our most valuable company, NVIDIA. So basically, we're trying to bring the supply chain back to the U.S. because for the longest time, Wall Street has rewarded corporations for outsourcing to China and stuff. But anyway, NVIDIA took a stake in Intel. Basically, NVIDIA didn't have to do this, but they kind of did it to throw the government a bone here. But basically, NVIDIA is now moving some of their older chip series, like the GTX 1080 series that they still produce, and some CPUs to Intel. So now Intel will make some of the NVIDIA chips. Basically, the government can't allow Intel to go bankrupt anymore either. Now, thank goodness they did this. They're going to pick up some manufacturing because their numbers are terrible. And if it weren't for the government and NVIDIA's stake, Intel would legit be collapsed and bankrupt. They're burning through billions. I mean, 17 billion that one quarter. If we go to the FCF, which is free cash flow, they're burning through a couple billion in free cash flow a quarter. So the sentiment has really shifted, and I do like that one now. I wouldn't make it a meaningful size position, but they're definitely interesting. Yo, Darren, hey, Wombat said, you earned my follow. Hey, I appreciate that. By the way, if y'all want to hit the follow button, we stream every single day, sometimes twice a day. By the way, I sell nothing. I have no course, book, WhatsApp. I'll never follow you. I'll never DM you. Please watch out for people impersonating me. I'll never follow you. But yeah, speaking of CEG, someone said, Constellation Energy, that's actually my largest holding here in my Robinhood portfolio. So check this out. The top, we have 15 shares of Constellation Energy. This is your main nuclear play. They literally own 30% of all the U.S. nuclear reactors. Would I buy it here? Certainly no, but like there's so much nuclear stuff. Like Oklo is junk, SMR is VST is all right, way smaller, but I've looked at all the nuclear names, GEV, VST, SMR, Oklo, all of them. CEG is the best. Like that's the one you want to have on your watch list. Don't buy them here, but put it on your watch list to eventually buy them. They have insane share buybacks, insane synergistic M&A, insane dividend growth. Everything about them is perfect. And they're my largest. Well, they kind of grew to my largest holding, but I had a huge position in them for a reason. Hey, Northern, what up, dude? He said, USAR. Oh, we gotta do AMD. Oh my goodness. Yeah, hey, we gotta do that one too. Taiwan is literally building facilities in the US. Yeah, you're right, LMR. You're right. Taiwan's actually building one in Arizona. So check this out right here. Here's USA Rare Earth. Yeah, that's weird right here. So that's down 15% today. Maybe U.S. Defense Department announces $1 billion critical minerals production plan. Yeah. Let's go to the news tab here. I don't know. Or intelligent comments? I mean, Okay. So, yeah, I guess I don't know if this one has gotten a deal yet from a government, or I don't know if anyone's taken a stake into them. I think people have just been kind of hoping they're kind of the next one to get a stake in. I don't know. Anyway, that's kind of like your other like smaller MP materials, like a LAC, smaller version of that. So let's pull up AMD right here. AMD is another one I own actually. Let me pull it up. Let me take a sip of my drink here. So yeah, AMD is one I do own here in my Weeble portfolio, which is down 2% on the day. Yikes, look at that. What's down the most? UiPath is down 5, Day 5, Disney, AMD. So yeah, AMD, full disclosure, I do own them, so I'm totally biased. But yeah, basically what happened recently is, if you're wondering why this huge gap up on no earnings, that's because OpenAI is going to be basically giving AMD a bunch of orders. OpenAI is buying a bunch of AMD chips, and also OpenAI now has a 10% stake in AMD as well. So that's really interesting. And here's the weird part. Nvidia has a $100 billion stake into OpenAI, and OpenAI now has a 10% stake in AMD. So literally whenever AMD stock goes up, now Nvidia indirectly goes up as well and benefits from it. Pretty circular, I hear people saying. So yeah, anyway, let's pull up let's see what the AI news says down here. So AMD Oracle forged partnership to deploy 50,000 MI450 chips. Pretty cool. So it looks like they're getting some orders from Oracle as well, and they're huge. Yeah, Oracle's opening up like 30 new data centers. So anyway, check this out right here. These revenue estimates are probably going to get even revised higher. Every quarter, they already beat on revenue. This is just like your smaller semiconductor play. They're easily making close to $1 billion in net income a quarter, or the free cash flow is insane. It's up 3x year over year. That's what FCF stands for. They did $1.7 billion of free cash flow. Look at this balance sheet. That's really good. They have no net debt. Like AMD is in a financially sound position. And here's why I chose AMD over Nvidia. It's because the law of large numbers. If you look in the very top right, the market cap, that's how much AMD's worth. They're worth $382 billion. And when I bought them, it's worth 40% less. But Nvidia is worth 4.4 trillion. So if you buy Nvidia right now, if you just buy a share of Nvidia right now, for you to double your money on Nvidia, they would have to be worth $8.8 trillion. And it's not as easy. Like the law of large, that's why I picked AMD as my semi play. And hey, with that new OpenAI deal, I mean, they're pumping. So yeah, pretty cool. What app is this? Hey, what up, Terrence? Yeah, by the way, this is a brokerage where you buy stocks on. Yeah, if you want to get it, it's in the link tree in my bio, very first link there. But yeah, also Nvidia, someone said, can we look at APLD? Speaking of Nvidia actually owns, if we go to the Nvidia portfolio right here, they own a bunch of CoreWeave, obviously, and their second largest holding is a bunch of APLD. We just looked at APLD. So I'll be super quick because out of respect, because we just looked at them. But if you're wondering why did APLD just rally up so much, it's not because of momentum. It's actually because of their amazing earnings. If we go to the revenue or their earnings this quarter, the analysts expected 45 mil. They reported 64 mil. And the EPS was expected to lose 13 cents. They only lost 7 cents. So they narrowed their losses half as better. Like, this is a data center hosting company. APLD is pretty cool. I can see why they gapped up. So why did you buy Ferrari? Oh, dude, we literally just explained that. Basically, I trust their numbers. I like their financials. So yeah, I'm being very slow to buy though. What up? Yeah, hey, Frederick, again, if you want to get this brokerage I'm on, or this app I'm on, it's in the link tree in my bio, very first link there. It's a brokerage where you buy stocks on. Again, it's a affiliate link, full disclosure. So if you go and deposit $100, we'll both get some like free stocks. So yeah. All right. Let's see. What should I buy in my Roth? Well, hey, I can show you my Roth IRA. So, I would just buy long-term assets, I've tried to get my Roth IRA more growth oriented. REITs are good in here. I have one REIT, Iron Mountain. That's whenever they have a high dividend yield, but the dividends are taxed a little differently. But yeah, I just try and buy growth stocks in here. And here's a lot of these are so risky. But yeah, I just buy the S&P 500, QQQM, all these. Dang, the market is trending down even lower. That's not great. We're down 1.25% on the day now. But that's worse than the market. The SPY is down 1, and this portfolio is down 1.25. Well, at least this one's green. Okay, what stocks did you lose the most on? Hey, good question. It's actually ChargePoint. That's like my biggest loss, CHPT. But actually, good thing I sold it because we would have lost a lot more. But yeah, here's some of my biggest losses in here. UiPath, Zoom, Sprouts Farmers Market. And here's our lifetime performance. Again, we've definitely underperformed. I'm not an expert. In the top left, we're only up 19% all time in here. Yeah, I just love being fully transparent. I go to a bunch of other streams. So no one ever shares their portfolio or anything. I want to know if AMD's still a buy. AMD's not a buy right here. Certainly not a buy here. AMD would need to fall like another 10 to 15. What do you think of Progressive? And we got to look at, what up, Art? We'll look at Salesforce, Progressive, and maybe we'll get to Costco. Should I buy ETFs? Yeah, I love ETFs. Yes, sir, Embryon. ETFs are amazing, like the S&P 500. But here's Palantir. This is your government contract play. Let's see, is there any news around them? Oh, Snowflake and Palantir announced strategic AI integration platform. Basically, Wait, Palantir CEO meets South Korean conglomerate leaders for AI strategy discussions. Anyway, Palantir, this is a huge government play because literally 55% of all the revenue comes from the government. And look at how growthy it is. Like, this is what justifies the high multiple. It's up 49% after it grew 23, after it grew 15. Like, the growth rate is growing. And also not just the government side, but also the commercial operations. It's up 46 after 32, after 10. So both businesses are booming anyway. Still way too expensive. They traded 122 times revenue. That is absolutely nuts. But not 122 times net income, but of revenue. So they need to like 3x the revenue for this to be somewhat reasonable. But anyway, yeah, the fortress balance sheet, literally no debt at all on Palantir, completely debt free, $8 billion of cash, making net income every quarter, expanding net margins. This is the kind of stock that it totally deserves a high premium. I can see why I wouldn't buy it here, and I would love to own that stock. They're on my watch list, but they need to fall quite a bit. So Salesforce, did they report earnings or what happened today? Salesforce unveils a fresh 7 billion share buyback program. Maybe that's what it is. Yeah, this is your CRM play. They own Slack. I love some of these. So yeah, they own services, sales, platform, integration, analytics, marketing. I love how, diversified the revenue streams are. And stacking slow. That's awesome, dude. That's awesome. But yeah, look at this net income growth. The net income went from 1.4 to 1.89. It's up 32%. Revenue is up 9. So revenue's up 9, but net income's up 32, meaning they grew their net margins, highest net margin ever, which is cool. And they can just spend it all on share buybacks and dividends. You also get a 0.66% dividend. I think it's worth nibbling here. I'd be slow to allocate, but I think it's worth nibbling at this price. Like even right now, it's worth like nibbling on. So Progressive Corp, yeah, this one, oh, dude, this app, unfortunately, it doesn't have their most recent earnings report yet. So basically, if we go to their net, here's what they reported. So if we go to 2024 Q3, they reported 2.3 billion. Well, they reported this quarter over 2.5 billion. So it's still, but here's why, they missed on their growth numbers. They missed on revenue, they missed on net income. But this choppy, you really bled it from the last quarter because that's how you do insurance companies because of how, I'm not worried. I'm actually looking to buy more Progressive stock. I looked into their earnings. It's really, I would not be worried. This is not bad news enough for me to trim or sell. If anything, I'm actually looking to buy a little bit more, like one more share. Why is Oklo down? Oh, hey, by the way, on this app right here, actually, this is funny right here. On this app right now, they're doing this like paper trade challenge where if you rank in like the top 100, you'll like split a prize pool. Oh, what I just click? I want to show you what I put all my oh no, I'm down 30. I put basically my entire portfolio on Oklo puts. So yeah, we're down again. It's a paper trade, but yeah. Anyway, I'm not. Oklo should be down. Okay, so Costco, yeah, Costco's a great business model. Or, to get into a Costco store, you got to pay for a subscription. And whether you go to the store or not, they still collect that high margin subscription revenue. And customers don't mind going there because you're buying stuff in bulk and you get a good deal. Also, they have a lot of loss leaders like the $1.50 Costco hot dog, the rotisserie chicken, and they make good net income, $2 to $2.5 billion in net income a quarter, small dividend. But the thing scaring me from Costco is still this high valuation. That's why I think they've kind of been trending down lately. Like they just trade too expensive. Like they really do trade at 50 times net income. It's a little too pricey for me. But I'd love to own them. I actually decided to buy instead of that, and it still hasn't done great, Sprouts Farmers Market. It's like a healthier grocery store with way higher margins, different business model, but yeah. Do you have any banks in your portfolio? No banks? Well, technically SoFi, because they do have their own banking charter, but just SoFi, or maybe I don't think T Rowe's a bank. T Rowe's like an asset manager, but maybe they do. But anyway, T Rowe, and SoFi would be like my main fintechs. Oh, and I got Robinhood too. Someone said favorite ETF. Yeah, really quickly, my favorite ETF is just QQQM. It's the lowest expense ratio way to get exposure to the NASDAQ 100. It's this exact same thing as the QQQ. I kid you not. Just with the lower expense ratio. And of course, they don't market this one. They wouldn't make as much money. They always market QQQ so they make more money. So and you literally save $15 per $1,000 a year by buying QQQM over QQQ. Check out Adobe. Yeah, what up, George? So Adobe, yeah, this is another one kind of like Salesforce, kind of being hurt by the AI thesis. Look at that. That's not great. This app is telling me, what is this? This is a bearish flag. So that's not great. As you know, I don't like looking at technicals. Well, I like looking at them, but I mainly like looking at the financials. Check this out right here. If we look at the PE ratio, this again, this is so low. They're trading at 20 times PE. I mean, that is like cheap. I'm actually looking to maybe nibble on some Adobe. Like they're like the numbers right now are still good. Like they're easily making 1.7 billion in net income a quarter. But the reason the stock is falling is again, will we need Adobe in 10 years? Will we need Photoshop? Like I know someone who just made an incredible logo in ChatGPT, that would have taken me a long time in Photoshop, and it doesn't look AI generated. It looks great. So maybe in 10 years from now, we won't need Adobe, but I'm a believer that we always will need the final touch for art or for professional art. And Adobe will slowly get priced from an AI loser to a slight AI winner. And maybe this goes up 10, 20%, but I wouldn't trust that too much. I would very much nibble, make it a small size position. Nothing meaningful, but I love their share buybacks. They bought back like 6% of the shares the past year while the stock's on a good dip. Like they're killing it. I like it. It's just the future sentiment is what's really hurting them. What will happen in 10 years? They're also seeing some increased competition from like Figma, Canva. Okay, so here's someone said the Honest Company. Why is PE so high? Oh yeah, that. For AbbVie, that's because they had an artificial one-time adjustment to their net income. Hey, try not to spam there. Yeah, hey, I don't know. Yo, man, if you got a stock you want me to look at, I'm going to have to, you'll be able to comment in a minute here, but if you got a stock you want me to look, let me know the ticker symbol. But yeah, here's the Honest Company. Here's why I think this one has just sold off this whole rally. Like this, I think investors are just disappointed. Like if we go to their revenue, again, the revenue, the sales, the lifeblood of the company, how much is it growing? Well, the revenue only grew 0.44% year over year. That doesn't even beat inflation. So sales are only up 0.44. Yeah, again, they just sell a commodity. They just sell diapers and wipes. So it's tough. $400 million company. They did go net income positive. That's good news. They did make net income the past 2 quarters, but I really just want to see more growth to that company, to be honest. Someone said, what app is this? Yo, what up? RXNA. Yeah, by the way, this is a brokerage right here where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. Let's see. Wait. I think shorting quantum stocks is the play. Hey, what up, Luca? Yeah, it's tough to short the momentum stuff, though, because you could lose a lot of money, but it does sound fun. I'm not good at that, though. Thoughts on TQQQ? Is that the triple Qs? So yeah, this one is basically like you need a plan to get out of this position. This is the triple leverage Qs. The thing in 2021 went from 85 to 16. So that's like, that's an insane drop. And you look at this dip right here during April. The thing went from 90 to 30. Whoa. So yeah, anyway, this is the triple leverage Qs. Whenever the QQQs go up 1%, this goes up 3%. But also when it goes down 1, it goes down 3. Bro, I'm barely starting out. What should I do before I do absolutely anything? Yo, what up, Spooky? Hey, yeah, I would just buy the S&P 500. And then, don't mess around with the super risky, revenue-less startup, kind of junk stocks. Buy stocks with good financials, I think. Buy stocks you use and love, Amazon, Google, Meta, McDonald's, whatever, NextEra Energy. Buy companies you actually use. Oracle, whatever. Let's see. But yeah, the S&P 500 is great. Most investors, most hedge funds even can't outperform the S&P 500's 8 to 10% CAGR. Like the S&P 500 and how it works, it's market cap weighted. It's tax free the way they exchange stocks and sell the losers and buy the winners for profit. Like ETFs are so taxed. It's great. So yeah, the best way to get exposure, by the way, to the S&P 500 is ticker symbol VOO. It's the lowest expense ratio version of the S&P 500. So yeah, for every $1,000 you put in, you're paying $3 a year, and you're like, that's so little, 0.03. The QQQ has like a 0.4. It's crazy. Is Futu a buy? I think so. Futu is a good buy, I think. I do own them, full disclosure. Axon's down 10. Oh yeah, actually Axon's down 10%. China came out today or actually yesterday and said China has like a list of like companies that they deem like a national threat to China, and basically China just included Axon Enterprises on like a national security threat for their drone detection. What that confirms to me is that they have such good drone products that anyway, what was I looking over here for? Oh yeah, Futu. Yeah, speaking of this one, this is a better version of Robinhood. This is a good time to nibble right here. I mean, they're trading at 17 times forward PE. You get a yearly special dividend. They're super growth. Here, let's actually go analyze this one really quickly. If you're wondering, what is Futu stock? What is FUTU? It's literally, you know, this app I'm on, or this brokerage, this is a brokerage right here we buy stocks on. It's literally this brokerage I'm on right now, publicly traded. So this software I'm using to analyze stocks, it's this software publicly traded. And check this out. If you it's good to know that I'm trusting my stocks with this company. It's good to know that at least they're making an insane amount of money. Again, even if this company went bankrupt, you're still FDIC insured for $250K, but they're nowhere near. They're printing money. $330 million in net income this quarter. Here's the thing with these brokerages. They have insane margins. Robinhood is just now like this too. Robinhood has finally fixed their margins. But Futu, I think, is the way better, cheaper play. If we look at the revenue's up 69, but the net income's up 111. They literally grew their net margin from 38 to 48. So that just literally adds so much to your bottom line. That's because they've gotten into the high margin transaction crypto market. So now on this app, this brokerage, you can buy crypto on here. And, whenever, like on Robinhood, that's Robinhood's most valuable business. Whenever you go buy or sell a stock, they barely make like a penny on it. But whenever you buy and sell crypto, they make a lot more money. It's like 3 to 4x more valuable than a normal stock trade. So that's where they try and make their money. And they just got into this. So that business is growing like crazy. But mainly brokerages make a lot of money from interest income. If you look right here, interest income is up 43% to a new record. Basically, if we look at, I keep my cash in here. If you look at the middle of my screen, I have $615 of cash. For free, they give me a 3.85% APY. Why do they give me a free 3.85% APY? Because they also make a little bit of APY on top of that. They're making like 4.25% on it. They give me 3.85 and pocket the rest. So anyway, that's why this is the lowest fee best brokerage in my opinion. Again, if you want to get this brokerage I'm on, it's in the link tree in my bio, first link there. Someone said Amazon. Hey, we just looked at Amazon not that long ago, but yeah, Amazon is in my portfolio right here. Great never sell company. They're worth, if you have the intention like me to never sell Amazon, they're worth buying even right now. I mean, you can see, all those are my buy orders right there. Hey, what up, Sermon? Good to see you. Yo, what up, Hill? Stooge said, can you look at WTS? Let's check it out. So, this one's actually on my watch list. So there must have been something that impressed me about this company in the past. Oh yeah, hey, I heard that, Krim. Amazon is working like a healthcare vending machine. Did you see that news, Krim? That came out today. For in like pharmacies where you don't have to interact with any people and saves an employee or something like that. Anyway, AI taking over again. But check this out right here. Here's WTS stock. This is Watts Water Technology. Their main business is their residential and commercial flow. That's it's basically a utility. And the revenue for the year is up 17 after growing 11, after 9, after 22. So they're on a growth streak on their main business. They're also in heating, ventilation, air conditioning. I like that. That's the HVAC business. And then drainage and water reuse. This is an industry that can't really be replaced by AI. Let's see their net income. Yeah, here's their after-tax net income. Easily $70 million. And they made $100 million this quarter. That's great news. What's the dividend? You get a 0.66% dividend. Look at how they raise the dividend every year. But I would want to see a bit more growth on the sales. If you go to the revenue right here, the revenue's only up 7. Well, I say that because if we look at the last 2 quarters, the revenue declined last quarter and it declined the previous quarter. But investors, they deleveraged as well. I mean, for the most part, this looks great. I mean, Morningstar has a economic moat is wide. The company's excess returns on, okay. Oh, well. All right. They're interesting. What's the PE multiple? They're only they're trading at 29 times PE. Industry average is 32. Maybe they can stretch up to a little higher multiple. Pretty cool. Okay, Tech said thoughts on SoundHound AI. What up? So the thing with this company, if you're a shareholder of this stock right here, there's one thing you want to watch. So if you're a shareholder of this, there's one metric you want to watch, and that's their subscription service. They have some AI audio subscription, and check out the growth of it specifically. This is why investors are so happy. The revenue's up 800% after it grew 800%. So they're on it like literally. This used to be a nothing burger, and I mean no sales at all. Now it's insanely beat expectations, and here are the expectations. Analysts thought they were going to make 32 mil of revenue. Well, they reported 42 mil, an insane beat. So no wonder they gapped up so much on earnings and have been trending up since. So as long as they can keep up this growth rate, I like this one. I would still be careful because they're losing 40 mil a quarter, but as long as they keep up this growth, I mean that's great. 876 said, what about gold? Yeah, hey, if you want exposure to gold, that ticker symbol IAU. Wow, new all-time high today on gold. This is insane, yo. Congrats if you own gold. I mean, it just continues. Look at that. It's literally the commodity of gold publicly traded, so it's crazy. Went through Ferrari, can't imagine it not being. Hey, what up, Peter? Yo, I did buy some Ferrari stock. Yeah, that's my most recent purchase in here, and my other most recent purchase is actually MUSA. Someone said, what platform or app are you using to check this? Yo, what up, Gildan? Yeah, by the way, if you want to get this, by the way, this is a brokerage. It's where you buy stocks on. If you want to get it, it's in the link tree in my bio, very first link there. Yeah, it's one lowest fee brokerage in my opinion. It's an affiliate link, full disclosure. So if you go and deposit $100, we'll both get some free stocks. But yeah. Yo, check out Path. Yo, UiPath. I have like mixed feelings about this one. They're one of my big losers. Let's see if there's any news down here. Weekly news. Yeah, AI or UiPath formed a strategic partnership with Snowflake, Google Gemini, and OpenAI. And that's really why they've been momentuming up. Like these past couple of days, the reason they've been rallying up is because of that. Look, there's no earnings report. There's no earnings these days. It's just that good news. It's the future sentiment. But I don't know if they have a moat. They've really just been, like if we zoom out on the weekly, they've really just been out innovated. They're like a small robotics kind of software AI play. But they've really just been out innovated. They're only worth $8 billion. Here, I'll show you my position in them. I check this out. So we are down 24% on UiPath, and check this out. We've been holding the bag. We've been holding this stock. These were my original buys in 2021. So leave likes on the video for me. Yeah, by the way, if you want to hit the follow button, we stream every day. We just look at stocks and stuff. Yeah, watch out for people impersonating me. I'll never follow you, DM you. I don't sell anything. I have no course, book, WhatsApp, Telegram, nothing like that. So, American ABAT. Yeah, I forgot to get to that one. ABAT. So this one, it's down 36%. Wait. American Battery. Regardless of outcome of appeal, the DOE grant termination. $115 million project grant axed. Okay, so that's what that's tough. I mean, yo, dang, because the whole company is worth $660 million. So $100 million grant that's literally a huge chunk of the whole market cap. So that I can see why that's rough. So Daniel said ASML. Let's check out ASML. This is your lithography play, your chip making manufacturer. What up, Devin? And John, we'll get to Nvidia and OHI. Fellow path bag holder here. Have a good feeling about the future, though. Exactly. I haven't seen this good of sentiment around UiPath like ever right now. So I do like that. They're at a really cheap valuation too. They have like $3 billion in net cash, I think. So anyway, here's ASML right here. This is your chip making manufacturer, and they deserve to be doing this good. I mean, I can see why they're close to an all-time high right now. Let's see. ASML reports Q3 net sales of $7.5 billion, projects 15% growth for 2025. ASML plans new share buyback program, $1.60 dividend. What was it last quarter? Let's see. It was $1.80 last quarter. Oh, no, that's in USD. Anyway, let's go look at their numbers. Again, they're a European company, so we've converted the currency from euros to USD. And here's what I love about them. Here's what justifies the stock going up this much, in my opinion. We go to the revenue. The sales is up 35%. So the revenue's up 35%. but the net income is up by 86. That is insane. What does that mean? It means they expanded margins. Net margin went from 25 to 35. That just adds money to your bottom line. And you get a dividend with this one. What's the multiple? So 36 PE, that's pretty fair. Saying the industry average is 33.8. So they definitely deserve a small premium. Anyway, I do like ASML. I don't know if I buy them here, but I do like them. I wouldn't buy them here meaningfully. So here's Nvidia too. So speaking of the whole chip ecosystem right here, here's Nvidia. Of course, there's always news around here. You know what? BlackRock led. Okay. Anyway, here's what's great about Nvidia. Obviously we know they sell GPUs. Their GPU market share is at 24%. Up from 20, so that's growing. They also have in their automotive software that's basically a Tesla competitor that anyone can buy off them. They're also growing their data center business. The data center revenue is a new record. Basically, this company has insane margins and the best customers because their main customers are the most cash-rich companies. The other Mag 7, it's Oracle, OpenAI, Amazon, Meta, Google. So they have insane margins. If we go to the revenue, their total revenue was $46 billion. Out of this $46 billion of revenue, $26 billion of it was after-tax net income. They have a 56% net margin. So you go spend $100 on a chip on one of their products, $56 of it is after-tax net income from them. They also just took a $100 billion stake into OpenAI, which has a stake into AMD. They also took a 5% stake into Intel. They also announced a $60 billion share buyback program. I mean, NVIDIA's, America's biggest company. NVIDIA launches DGX Spark desktop AI supercomputer. I mean, the list goes on for good news about this. So, anywho. So once again, you can talk about BLDR. Yeah, this is one of my favorite ways to buy an interest rate sensitive sector. Actually, our roof shingles on our house, our roof shingles are actually builder first source roofing shingles. So, hey, I'm supporting the company, right? But yeah, look at this. Here's the super interest rate sensitive, home builder adjacent, lumber and lumber sheet goods, specialty building products, windows, doors, manufactured products. So if we go to the revenue right now, it doesn't look good. It looks bad. That's because of the high rate environment. People aren't buying new houses right now at these high interest rates. It'd be stupid to pay that mortgage. So look at this. The revenue's down 5%. So the revenue's down 5 and the net income is down by 50. So I can totally understand why this one's doing so bad right now. They're losing their margins, 4% margin. But here's what's so cool about this company is actually how much they spend on share buybacks. Literally just since in 2022, literally this was the year that I remember they bought back 20% of the company this year. I kid you not. 600 mil a quarter, that's 2 billion plus. The whole company's worth 13 billion today, and they bought that back in 2020, way at $50 a share. So it was half the market cap. Anyway, those share buybacks were immensely good for the company. John said OHI is a good dividend stock. Let's see. Can you check out Rich Tech Robotics? Yeah, I don't love Rich Tech Robotics. That's kind of a revenue-less startup. But maybe you can look at UEC. Actually, I do like UEC. They actually do have a good uranium mine. They bought one off Rio Tinto, which also Rio Tinto is a good stock too. But here's Omega Healthcare Investors. She said it was a good dividend stock. Let's see the yield. Yeah, 6.65% yield. Is this a REIT? Oh, it's a REIT, a healthcare REIT. So actually that abnormally high dividend is actually sustainable again because they literally have to by law pay out 90% of their taxable income in the form of a dividend to avoid taxes. So yeah, here's how much they made, 240 million. So they made 240 million and the dividend cost 194 million. So they can easily afford the dividend. Again, these don't really outperform in the long run though. Like if we go to 19, if you bought the stock in 2019, you're down on your position. But you get the nice yield. So you're buying that to kind of maximize your income. Now, if you're looking for another healthcare REIT, one that's more growthy, here's one I like for you. This is CTRE, Care Trust REIT, another senior housing operation. But check out the growth over here. This is what I like specifically. The revenue's up 63 after it's up 30. Like these year-over-year growth rates are insane for just a boring REIT. And you get a 3.7% dividend. And if you go to the comments tab, you can see my old video I made about this stock. So yeah, I used to go over a bunch of REITs. I posted that in May. That's an old video. Anyway. Okay. SoFi is good. I love SoFi. Not a good valuation today, though. What about Root doing terrible today? Is that it? I think that's that DTC insurance company. So yeah, check that out. They're down 5.5%. Hey, what what's up? Monkey and Fortis. Yeah, we'll get to SoFi. Don't worry. Oh, and Taiwan Semi and LXRX. I want to get to all these. So here's Root right here. They basically were priced to bankruptcy back here. Then they did a stock split, so that's why it's $75 today. But check this out. Here's why this is why they deserve. You know, they went from basically $10 to $70. Here's why they 7x'd. It's because they finally got profitable and they grew their sales insanely. Like if you go right here to the orange line again is what the analysts expect them to report. It's data from S&P Global. Look at how they beat on revenue like crazy every quarter. They beat on net income and they beat on EBITDA every quarter. This has just been super growthy, you know. So nice. And look at this. If we go to the net income down here, this is also great news. They're easily making $20 million of net income a quarter. So, yeah, direct to consumer insurance products. Come on, is it going to load? Oh, yeah, look at that. So there you go. We're go to annual basis here. All right. What's happening? Nathan, catch the drop. Hey, I did buy a little bit of Cormedics, but yeah, look at this. Our main account is down 1.15% on the day. RIP. You know, if we go to the QQQs, actually, we've been recovering. Actually, we've recovered the past couple of minutes. Great. But yeah, this portfolio is green on the day. What's the app called? Or hey, I'm not sure what app you're talking about, by the way. All three of these these are all brokerages right here where you buy stocks on. So if you want to get any of them, they're all in the link tree in my bio. The one I've been using though, out of all three of these, the one I'd recommend the most is the one I'm on right now. So yeah, if you're interested in stocks and want to buy stocks, you need a brokerage. I'd recommend this one. It's the lowest fee, my favorite brokerage, most useful one. So yeah, if you want to use it, get it. It's in the link tree in my bio, the very first link there. It is an affiliate link, full disclosure, so we'll both get all the links up there are affiliate links. So if you go and deposit like $100, we'll both get some free stocks. So Looney said Caterpillar, dude, MADE is a niche ETF of USA manufacturers. Well, let's check that one out. Yeah, the iShares. Oh, it's run by BlackRock, so it probably has a really low expense ratio. Let's check it out. So again, an ETF is just an exchange traded fund. It just owns a basket of stocks, and it owns TEL. That's kind of like a mini or Amphenol. But look at the second largest holding. It's Amphenol, then Eaton, which is basically a slower growing Powell Industries, but I love Eaton. Cummins, Honeywell, they have some aerospace products. I actually love all these holdings. DE, they probably have a decent yield too. Yeah, 1% yield as well. I don't know why it owns Ford. I don't love Ford, but anyway, I actually like ticker symbol MADE. Can you do HIMS? Yeah, hey, my bad. Let's get to HIMS right here. I saw that one a few times here. Oh, yeah, my bad. Then we'll get to UEC too. Don't worry, I'll try and get to all the stocks here. And by the way, if you wanted to follow on, we stream every day. Where does Nebius need to be at to nibble? Oh, a lot lower. I bought some CRMD. Yeah, CRMD looks good. Hey, what up, Mo? Good to see you, buddy. We'll look at Broadcom after this too, for sure. So here's HIMS and hers. They're down 6% on the day. I heard if we look yesterday though, the reason they gapped up so much is because they released a new product. Let's see. HIMS launches menopause care service on her platform. So, targeting 1.3 million women experiencing. Well, cool. Let's check it out. Let's go look at their numbers right here. That should be a nice future growth stream. Again, if you're wondering why did the stock fall so much over here, it's because they used to sell a weight loss prescription on their website. They used to sell actually Ozempic, a weight loss prescription. Now Novo Nordisk abruptly ended the partnership and they now no longer sell any weight loss prescriptions. So that was a lot of the growth. If you go to the revenue right now, extremely growthy. But they were thinking like, hey, the future growth estimates need to come down if they're not selling that anymore. But they just did release some new testosterone products and then new women's products. So that's pretty cool. They'll kind of answer that by bringing the growth back. I like this one. They're making net income every quarter. The valuation might be a little high here, but I actually like this one. Maddie said what happens is, oh yeah, hey, by the way, this is a brokerage right here where you buy stocks on. Yeah, if you want to get it, it's in the link tree in my bio, the very first link there. Again, they'll ask you for a bunch of information. Full disclosure, it is an affiliate link. So if you go and deposit $100, we'll both get some free stocks. NAK stock. What's NAK? This is Northern Dynasty Minerals. Ooh, probably another one momentuming on the LAC MP Materials kind of momentum. Again, I think the whole industry is falling right now because ABAT, American Battery Technology, lost a huge grant for this rare earth mineral mine. or lithium mine or something, which was weird. But yeah, again, this one's still a startup. You go to the revenue, it says zero because, they've never sold anything, never sold a product or a service. Yikes, look at that leverage. Are they losing a bunch of money? Look at that. When you lose net income, that money has to come from somewhere. So look at how the assets slowly go down and the liabilities go up, not the trend you want to see. So anyway, I'd be careful with that one. So let's look at Broadcom right here. This is like a smaller version of Nvidia, and they've actually been getting a bunch of orders from OpenAI. Broadcom launches Thor Ultra AI chip, partners with OpenAI for custom AI accelerators. Those are called TPUs, those like custom chips where they still design on top of it. Broadcom introduces industry-first Wi-Fi 8 platform. Cisco launches new AI router to compete with Broadcom. Oh, well, anywho, let's go look at their actual numbers because all that is just news. But yeah, a lot of people know them for their semiconductor solutions, which is, why they're known. But a lot of people don't know them for their infrastructure software. Check out how it monstered up in 2024. And ever since then, it's been super growthy. I mean, the revenue just hits a new record every year, every quarter. So this business is booming, holding on to the gains. If we go to the FCF, which stands for free cash flow, they're printed money. This is why they deserve an insane multiple and insane market cap. I mean, they're literally making 6 to 7 billion of free cash flow a quarter, and it grows 40. Like, these are insane growth rates. At this growth rate, what's it going to be the same time next year? Not just 6-7 billion of free cash flow a quarter, but also net income. They're making 4 to 5 billion of net after-tax net income a quarter. You also get a yield way higher yield than Nvidia. So I really like Broadcom, but I do think the valuation might be a little too high right now. What's the best bank stocks in your opinion, dude? The best performing ones have always been JP Morgan and Goldman Sachs. I mean, these are the two bank behemoths that just continue to perform amazingly. Ticker symbol GS. Goldman Sachs and JP Morgan have been I think legit the best two performing banks. I do like some of the Canadian banks because the government likes them. So, UEC right here. So this is one of the uranium plays right here. So, UEC. Wait, I'm typing it in the ticker wrong. So Uranium Energy right here. Again, they bought them, and they do actually have a good uranium asset. So I've looked at a lot of the other uranium names. A lot of them are kind of junk, but let's see. U.S. Department of Energy forms Defense Production Act Consortium for Nuclear Fuel Cycle. That's good news for the uranium because nuclear fuel is uranium. So also, if we just go to the whole uranium ETF right now, ticker symbol URA, look at the momentum. So all the uranium names are doing amazing because we're no longer buying rare earth minerals it's specifically uranium from Russia or China. We're not buying them from them anymore. We're trying to source our own uranium from Canada and the US. So that's why a lot of the US uranium names have just been on fire. Best uranium play out there, honestly, the very best one ever is ticker symbol CCO, Cameco. It's the one, if you're going to buy a uranium name at all-time highs, it would be this one in my opinion. But that one's also a great one, UEC. Hey, what up? Aaron said CAMT. Let's do it. So this is Camtech. Closing cross. Market closes soon. 4 minutes. I don't even know. Dang, we've been streaming. Hey, if you want it to follow on, we stream every day. Hey, watch out for people impersonating me. I don't sell anything. I have no course book. I'll never follow you, DM you. But yeah, this is Camtech. If you look in the top right, they're worth $5.6 billion. That's interesting. Let's go see what they do. So sales of product. Look at the growth there. I mean, 2024 was really good. They're beating on expectations. Let's see down here. Revenue, that looks great. If we go to on an annual basis here, or we just did that kind of. Net income's great as well. Easily 30 to 35 mil in net income a quarter. What are their margins? Net margin, these are great margins, 28. I can totally understand why the stock has done so good. I mean, everything here is headed in the right direction. Sales are growthy, net income's growthy, good balance sheet, deleveraging balance sheet while growing assets, free cash flow super growthy. It's pretty interesting. Tom said, could you please check Fubo and KSPI? What is KSPI? Caspi.kz. So it looks like this one just IPO'd not that long ago. Let's go see what they do. They're a $14 billion company. Wait, where did they get the oh, so look, actually, that's interesting. Look at that. 99% of the revenue comes from Kazakhstan. I'm probably pronouncing that wrong, but oh well. They're a marketplace. Maybe they're like an Amazon. Whoa, check out that growth. You said CCO was the ticker of the uranium company. Yeah, Zach, there is two different CCOs. There's a one called Cameco and one called Clear Channel. You want to get the Cameco. Um, they're actually Canadian, so you might not even be able to buy them. So anyway, here's their KSPI marketplace revenue. It's up 150%. After grew 85, after grew 96. Like that. Wait, yeah. So we've converted the currency from KZT, Kazakhstan currency, to USD. So this isn't US dollars. Let's go see it. That's their fintech revenue. That's up 10% after going 16. I mean, everything here looks great. And this is in USD. They're making 500 mil plus of after-tax net income a quarter. So I wonder why the stock is trending down. Maybe it's just like the whole economy of Kazakhstan. I don't know. But anyway, I like those growth numbers. Interesting. And yeah, for Fubo, though, Kotek said it's fake, or I don't know what that means. I am real. This is live. The market closed in 1 minute. So hey, if you don't believe me, the market closed in 1 minute. Can't make that up. And ROC City says what platform you want. Yeah, hey, by the way, if you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. This is a brokerage where you buy stocks on. Full disclosure, it's an affiliate link. So if you go and deposit $100, we'll both get some free stocks. As someone said, is Robinhood safe to invest or keep your stocks in? Actually, I have all these brokerages. By the way, if you want to get any of these brokerages, they're all in the link tree in my bio. But yeah, no matter. Brokerages are all FDIC insured. So let's say Robinhood goes bankrupt, you're good. Mumu goes bankrupt, you're good. But you can buy stocks on any platform. You can buy stocks on Cash App. But I like this one specifically because it's the lowest fee, free brokerage with the most useful analysis. That's why I've been doing all the analysis on this app right here. You can get all the super investor portfolios like the Nancy Pelosi tracker. But well, this isn't exclusive to them. They have to make all their trades public by SEC law. But and Buffett too, and you can like batch trade, follow them into their positions and stuff, and just see what they're up to. It's kind of cool. There's a lot of cool features as well. Oh yeah, like someone was asking me about interest rates. Yeah, if you go down here as well, you can see the interest rate cut probability tracker. Like literally on October 29th meeting, there is a 95% chance of a 25 basis point cut, and on the December 10th meeting, 82% chance of another 50 basis point cut. Pretty cool. So yeah, let's keep going. Oh yeah, and we can view all the like different watch lists right here. If you like nuclear power, you can basically just find new sectors and invest it and try to find new stocks. And like we were looking at a bunch of drone plays, like the best. Kratos has it. Kratos is really cool. Their government contracts pricing power has been insane. But yeah, anyway, let's keep going here. Let's get off that. Fortis. We literally just looked at Broadcom. I feel so bad. We should change dollar as main currency. Yo, what up, Axel? So Adventure said RZLT. Let's check it out. So this is Resolute right here. So someone said Robinhood didn't let me cash out GameStop back during. Oh, dang, Omar. Yeah, they were in some water for that. It's actually those Citadel. Sorry. Yeah, by the way, if you want to get this brokerage I'm on right now, again, it's in the link tree in my bio, very first link there. All the brokerages are up there. But yeah, first link for this app. RZLT. So this stock right here, this is Resolute. I've actually never heard of this company before, but they've had some nice momentum the past couple months here. They're still a small company. If you look in the top right, they're only worth $800 million. But let's go look at their numbers. Revenue is zero. So this is a startup. So if we go to the revenue, it says zero because they've never sold anything. They've never sold a product or a service. That's why it says no data. And they lose 20 mil a quarter. That's rough when you're worth 800 million and you lose 20 mil. Not great, but they have the balance. Oh yeah, so look at this. Every year they dilute. That's funny. So if you go to cash and financing activities, they just diluted you by 100 mil, 60 mil. That's how the balance sheet gets to sell. It just spiked up from the last quarter. Anyway, we just want to see them actually finally sell a product. Maybe they're rallying because maybe they're getting close to selling something. I don't know. What industry are they in? Biotechnology. Engages in development of therapies for patients with metabolic. Well, I won't read all that, but anyway, be super, super careful with that one. Bro, you have one of the best stock trading. Hey, Ed, I appreciate that, my friend. I appreciate that. Hope you're having a great Thursday, by the way. BRICS is already doing something. Yeah, BRICS is basing their currency based off gold, or part of it backed by gold. And You look at gold right now. Gold's at an all-time high. I've always had this conspiracy that if BRICS actually backs their currency with gold, whenever gold goes up, that gives them more power, and the U.S. government will they'll basically artificially send gold down to weaken our opponents in one way or another. They can just do that. So I don't know why I'm going all conspiracy speculative. We won't speculate, but I wouldn't buy gold here. But congrats if you own some. I mean, gold's been nuts, and it's definitely it should be a little part of everyone's portfolio, like a small percent. I don't own any gold. Well, maybe a gold chain has a little value, but I don't know. I'm new to stocks. What should I use for my first stock? Hey, yeah, I'd buy the S&P 500. Google, Amazon, McDonald's. Something you know, like Coca-Cola. Something you need to You're onto something if we get back on the gold standard. Here's the thing. Here's why we can never use crypto or gold as our currency. You ready for this? Because whenever there's deflation, and here for the US, whenever there's deflation in the US, we need the ability to print money. Because whenever we're in deflation and we print money, it stimulates the economy so much. And it's not we need the ability to just be able to print money in a deflation, and whenever there's deflation. Okay, anyway, that's why you can't use crypto as a currency. All right. BMNR. Hey, I think that's that Bitmine Ethereum company. So yeah, this is like the Ethereum version of MicroStrategy. Basically, they own a bunch of Ethereum. Tom Lee's on the board, if anyone knows who Tom Lee is. But you basically just trade this one off their NAV, their net asset value of their Ethereum. And this is a crypto, like revenue from self-mining is 92% of the revenue. Then they just hold the Ethereum. I think they stake it too. Yeah, this is a Ethereum holding company, crypto treasury stock. Honestly, it should just do whatever Ethereum does. I mean, nothing's really blowing me away there. Kind of like with MicroStrategy, I'd kind of rather just own Bitcoin. And let's see. Doge Elon, please. Doge Elon. I don't know what that is. Yeah, hey, Fortis, dude, I just said, we just looked at Broadcom like literally 5 minutes ago or less. So I would, but we just looked at them. Okay, so by the way, if you missed anything, I'm also streaming on YouTube. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but you can just type into YouTube Nathan Robert. And yeah, you can like rewind and see it. Worse said MSTU is cheap. Wait, MST, is that MS? Is that something MicroStrategy? This is the T-Rex 2x long MicroStrategy daily ETF. Oh my goodness. So basically you're just a 2x Bitcoin. Basically just a 2x Bitcoin ETF. You trade those, you want to have the intention to sell out. So A Simple said TMC stock. This is another startup, but basically if they can pull this off, it'd be very interesting. But this is they should be cut in half, in my opinion. Like this is a story. This is a startup. This is speculation. Like here, I'll show you what I mean here. If we go to the revenue, it says no data again because they've never sold anything. They've never sold a product or a service ever. They basically want to make these underwater robots that suck the nickel out of the water and suck these rare earth minerals. I think a little bit of gold as well out of the water. And then they have like not even close to making any revenue anytime soon. But anyway, there's kind of been some momentum around this name, kind of in this rare earth mineral craze environment. So yeah, they've been momentuming higher. Would I buy this one? No. I'd rather the stock like 3x. I'd want to see them actually like sell a product and then like I'm fine with them 3xing and then buying them after, but I wouldn't buy them here today. Yeah, hey, thanks, Sir Peanut. What up, man? Yo, you got a stock you want me to look at, Peanut? Let me know. Okay. So hey, yeah, someone said Kronos. Yeah, I don't know what that is. If you have a stock, you give me the ticker symbol and I can check it out for you. Stefan said Micron. Let's do it. Micron stock. So this one, if I own this company, would I sell it right now? Would I trim it at all? No, I wouldn't trim it at all right now because I think they're going higher. Even though they've rallied up so much, I think this is the kind of company that will continue to climb higher. If we go right here to their PE, the net income multiple, they're literally trading at 26 times net income versus the industry average of 48. They're and that's not propped up on some one-time adjustment either. They're really trading at that, 26 times PE. And here's the thing, they're just as growthy as the other names. You look at the revenue's up 46 after it grew 93. So the revenue's up 46, but look at the net income. This is insane. 3.2 bill, 2 bill, 2 bill. They're deleveraging their balance. Like everything financially is headed in the right direction. So that's why I wouldn't trim this one. I think they're going to continue to go higher. 0.25% yield too. They raise the dividend every year. Nice. All right, well, Okay, I think that's another uranium play. I don't know if they have any assets, but a lot of the uranium names have been going crazy because, uranium is what powers nuclear reactors. And there's been a lot of stimulus around nuclear reactors. And also, we're starting to source our uranium from US and Canada and not Russia anymore. Do they have revenue? So they do. They actually do have some assets, which is good news. Great balance sheet, no debt at all right here. That's great news. So they are losing net income every quarter, but that's no big deal. Anyway, I still wouldn't touch it even after this 13% fall. But if you're looking for a uranium play, they're an interesting one. A safer bet, if you just want to buy the whole uranium ETF, is just ticker symbol URA. The global X, and look at this. Even though it's an ETF, look at how growthy this is. I mean, it smoked the S&P 500 since 2019. Went from 11 to 55. Kind of cool. But yeah, it's tough buying now. What is this company? I don't know what company you were just looking at. Oh, Micron, ticker symbol MU. I think we're looking at Micron. So yeah. I got in at 60 cents. Hey, what up, D-Learns? And someone said ASTS. What up, Steven? Yeah, let me get to ASTS, then we'll get to Rolls-Royce. Will it be affected by tariffs? Yeah, Rolls-Royce is really an aerospace play. We'll check them out. But yeah, here's ASTS Space Mobile, another kind of space aerospace company but here's the thing with this company specifically. If you own this company, you are in for a volatile next 6 months because if you go to the revenue right now, it's terrible. $1 million of revenue a quarter. But if we go to the estimates right here, the analysts are, it was $1 million this quarter. Analysts are expecting 22 million next quarter. Then the quarter after that, 35 million. So it's really the next 6 months. I think that's why the stock has also been momentuming up so much higher because of those super high growth expectations the next 2 quarters. Pretty cool. So Omar said Okta. Hey, at my college, whenever I log into my college software for class and stuff, at the bottom right, it says Okta in big letters. So I'm sure my college tuition went to some of their software. Oh, no. Hey, try not to spam there. Hold on. Okay, so here's Okta right here. Here's why I think this one's a justifiable buy. Check this out. I mean, I could understand why this one was a tough buy a year ago. I mean, they were losing net income every quarter, burning through a couple $100 million net income every quarter. But now this company is extremely profitable, making net income every quarter. The revenue is super growthy. Revenue's up 13 after it grew 16. Revenue's growthy. Net income's positive. Really good balance sheet. The liabilities went from 33% of the assets to 29. So they've deleveraged. So that's why I actually like Okta. They're kind of just one of those names that have kind of been stuck in the mud since 2021. It looks like a Roku. It looks like a DocuSign. It looks like a PayPal. A lot of them have just been stuck. It's kind of weird. Is it still a good time to buy in? No, dude. CEG, I can't believe it. They're like $400. I mean, imagine 600. But yeah, I can't believe it. Constellation Energy is $390. This is your main nuclear play. If you want to get exposure to nuclear energy, the actual best stock, the best way to get exposure to nuclear is CEG. There is no close second. This is the best one. By far, there is no close second. They have the best dividends, best share buybacks, best synergistic M&A, best assets. They own literally 30% plus of all the U.S. reactors. But they're really overvalued right now. I'd probably wait for that. Yeah, worst case scenario, I don't think it'll ever again go below $310. So 310 is a nice level. I don't think it'll go below. It's at a nice a Fibonacci retracement line. So, which one? Yeah, hey, I didn't hear about that MC. Are any healthcare stocks moving? How's Eli Lilly moving on that news? Eli Lilly's not moving. Okay, Franco said ABAT. Oh, that's the American Battery Technology. If you're wondering what happened today, how did the stock collapse 36%? That's not your average momentum day. That's not your average bad day. It's actually because, unfortunately, this company lost $100 million grant. So look at this. American Battery Tech plunges as their $115 million project grant gets axed. So RIP. And you remember 100 that was 115 million. This whole entire company is worth 669 million. That's a huge chunk of their market cap. That's why it was so significant. That's why they tumbled 36%. So I don't know. I don't know if I buy the dip. Yeah, you're right. OBD, they lost that contract. Let's see here. Let's see. Yo, Hazelot said 9UV. I hope I can find that ticker symbol. It might be, yeah, I type in 9UV. I can't find that one. So Capital One stock, is that? Oh, yeah, that's the Discovery. I actually really like this name. I don't know if there was any news either. I don't just like this name. I really like this name. I'm actually going to put them on this watch list as well. I think they're a great never sell fintech. I mean, they really are a good one. So, credit cards, 72% of the revenue. Why is it up 33%? Obviously, that's from the merger with Discovery. So there's going to be a lot of future growth. Let's see, consumer banking. Yeah, that also spiked up. Good news. So yeah, estimates look great. Net income estimates are good too. Again, they lost 4.8 billion this quarter. That was a one-time adjustment from the merger, so you really don't look at that. But anyway, I really like Capital One. I don't them like a Visa, MasterCard. I keep them as like a small little chunk of the portfolio. What do you think of FCX copper? Hey, my favorite copper play is Amphenol Group. That's the one who's supplying Nvidia copper cables for their Nvidia NVLink spine product. It uses 2 miles of copper cables, mainly being supplied by Amphenol. I'll show you that stock after this. I also own them. But let's check this one out. Let's check out what they do. Market. So 30% of the revenue is the US. Japan is 23. Switzerland is 16. So it's a nice international play as well. It's not all just from the US, especially with these mineral plays. It doesn't matter if it's from the US. It's a mineral. But yeah, look at this net income. It's done really good. Probably just because the price of silver, or not silver, copper has done well. Actually, I haven't looked at the commodity of copper lately, but anyway, this is good net income. I mean, probably the best copper play out there. I mean, they're easily making 800 million to 1.5 billion in net income a quarter. They're trading at 31 times net income. Oh, wow, they're worth 60 billion. They're really big. Do you get a dividend too? And you get a 1.5% yield. So, hey, there's your nice copper exposure play. But the other copper play I was talking about is actually Amphenol. Yeah, I did. Yo, all-time high today on Amphenol. No way. We bought this stock mostly during the April dip down here. Just been holding on ever since. I heard this today. Amphenol is seen as the oh gosh, I'm gonna fumble the quote now. Oh, it's like the nervous system of AI. Like if a body was AI, like Amphenol's the nervous system, like that infrastructure layer, like making everything function. I don't know. Okay. Oh yeah, Rolls-Royce, RYCEY. They are, I think, a UK company. We'll check. So this is an ADR, but check this out. If you're wondering why has the stock been rallying up so much, it's because they're really an aerospace and defense play, and literally all the aerospace and defense plays have been on fire. A lot of people know Rolls-Royce for the cars, but I don't even think that's part of this stock. I think that's a different business, or they've spun it off into a different it's not under this publicly traded stock. Anyway, yeah, civil aerospace, that's 50% of the revenue. They're aerospace products. They make jet plane engines. And then literally 25% of the revenue is also defense and then power systems. So it's really an aerospace defense play, and their margins have expanded. Their net income's the most ever. Again, we've converted their currency from British pounds to USD, but since they're a British pound company, a UK company, they report in halves. They actually don't report in quarterly. So we have to look at it kind of on that. But anyway, they did 6.5 billion for the first half of this year of USD after tax net income. way higher from 2024 first half. So they're great. Buy COE over SoFi. Whoa. Okay, I've never heard of this one. Let's check it out. So, $270 million company. Yikes. Whoa, this stock is lower than it was in 2016. So, you bought the stock basically a decade ago. You're down. They have sales. So, whoa, that growth is good. So, small numbers though, so it's kind of easy to grow this. But, revenue went from 10 to 20 mil. Basically 11 to 20, 86% increase. I mean, the revenue is hitting a new record every year, every quarter. That's great. I love that. And they're only losing $1 million to, I guess, $3 million this quarter. They are a bit leveraged, more liabilities than assets. But I like that growth. As long as they can keep that up, I like this one. But is this a Chinese company? Hold on. Where's the revenue come from? So look at that. Yeah. Asia Pacific region, 65% of all the revenue in the other areas. So that might also contribute to a lower multiple. But anyway, that's good growth that they have of their revenue. As long as they can keep that up. Thinking of selling Rolls-Royce, 12K. What should I research to? Hey, yo, what up? I probably wouldn't fully sell out of Rolls-Royce. I would trim the position. I'd sell a couple of shares. Someone said, preferably F or NU AI, preferably F. Well, here's the thing, Evo. I feel bad. I'm basically gonna dog on your stock here, but if you're 10 years away from retirement, or like you have a long time till you retire and you don't need like income, like don't buy this stock. I mean, Ford, like if you bought the stock in 2001, you bought the stock literally 25 years ago, you're down 30 to 40% on your position. I mean, that's rough. I mean, you're basically buying this for the dividend, though. If you go to the dividend, you get a 6.4% dividend. But on a total return basis, you're really just not going to outperform the market in the long run. I'd recommend the S&P 500 over this. This app is telling me that there is what is this? A bearish flag. Well, there's technical analysis. Anyway, the numbers let's go to their numbers, actually. Revenue 4.5, mid-single digits. Yikes, did that really? Yo, the profits, the margins have collapsed. Yo, look at their gross margins. It's down 32, down 20 after falling 20. So they're operating. Yeah, I'd be real careful with Ford. SPAC, so what app is it? Hey, by the way, if you want to get this brokerage I'm on, this is an app where you buy stocks on. It's in the link tree in my bio, very first link there. Full disclosure, it is an affiliate link, so if you go and deposit $100, we'll both get some free stocks. And EU or UEC. Oh, wait, hey, we just looked at UEC. Basically, what I like about this one is out of all the uranium plays, this one actually does have at least some assets. Like it's not just some complete startup. They bought a uranium mine off Rio Tinto, so they do actually have some sales. Look at that. That's $50 million. Up a good chunk from the previous year. Really good balance sheet. So out of all the uranium plays, this is definitely one of the better picks for sure. Probably the top three. My top two, second or third favorite pick. Probably first favorite pick would be CCO. Can we do SoFi? Yeah, you know what? I got you. Let's do SoFi. We haven't looked at this one in a long time. So SoFi, I do own this one. Full disclosure. I know you don't trade options, but is Mumu a good app for trading options too? Yeah, it is. Actually check this out right here. They have a lot of cool things that you can see. You can see the unusual activity to see like what's happening. But anyway, they have a lot of different strategies that you can do. If you like, again, I don't love options, or I don't love options just because I'm not good at doing them. Haven't had a successful history with that, but some people are good at it and they make a lot of money. But anyway, let's get back to SoFi right here. Yeah, what up, Hill? Hope you're having a great Thursday. I'm actually about to end the stream in like probably 10 minutes. Yo, Peter, remind me to look at Cisco. I want to look at Cisco before I get off. I love them as a cybersecurity play. So check this out. Here's SoFi right here. This is a fintech. If we go to their financial services revenue specifically, this is what, in my opinion, justifies the high premium. The revenue is up 105 after it grew 80, after it grew 222. Like the growth is insane over here. So that's what I think justifies the high valuation. And that also explains why they're gapping up so much on earnings day. Because if we go to what they report versus what the analysts expect, it's a triple beat every quarter. Every quarter they're beating on revenue, every quarter they're beating on EPS, which is net income, and every quarter they're beating on EBITDA by a huge chunk. I mean, expected 84, they reported 125. So that's why I just think people are taking SoFi serious. They did 850 million of revenue. Out of the 850 million of revenue, 97 million of it was after-tax net income, basically 100 million of after-tax net income. I mean, this is great. I love SoFi. Full disclosure, I do own them. I might be biased. But yeah, let's get to Lyft here too, and then we'll get to Cisco. So Lyft, this is kind of like, I love Uber stock. Honestly, I'd rather buy Uber than Lyft just because I just want that tad bit more quality. But this one just got profitable basically in the past 3 quarters. Yeah, check this out. This is why they're finally a justifiable buy. If we zoom out, this company used to just burn through net income, a lot of it too, a couple $100 million a quarter. But now in the past 3 quarters, they've actually made net income every quarter for the past 3 quarters. And analysts are expecting them to stay net income positive for the rest of the time. So it's now finally a profitable company. We know the business model works. It's basically a commodity that people need. They don't really do like DoorDash stuff like that. I don't think Lyft like delivers you food or groceries, but it's like a pure rideshare play. I like Uber because Uber has Uber Eats and their rideshare, and Uber has a stake in Grab. And Uber actually had a nice dip today. I'm actually highly considering putting them in my Roth IRA. Actually, let me put them back on my hidden gem watch list. Actually, I'll put them in the Roth IRA watch list too, just because I love them. All right. Let's see. Hi, Nathan. What do you think about HESM? What up, dude? Yeah, so HESM, one of the reasons why the stock, like, just beware of this right here. I think it's pretty much priced in at this point. They've lost the market cap worth of what they're going to lose in the future. But if you're wondering what happened with HESM right here, there's no earnings report. No earnings report this day. Basically, their main oil, what did this company do? They have these oil and gas pipelines. That's mainly what they do. That's pretty much all they do. They're a midstream company. And basically, they 3 oil rigs use their one oil pipe. So 3 oil rigs use their one oil pipe. Now, only 2 oil rigs are now going to be using that oil pipe. So there's going to be less demand. Pretty much that was the bad news around this stock. And that's what sent the stock down. They lowered their guidance, but this is a huge dividend play. Check this out. If you look at the dividend, you get an 8.5% dividend. And another really, really, really cool thing about this stock is they don't give you a K1 tax form like every other midstream company out there. Energy Transfer, EPD, is it EPD? Energy Products. Yeah, this one gives you a K1 tax form. Western Midstream, they all give K1 tax form, but HESM does not give a K1 tax form. Pretty cool. So Oscar, yeah, this is one. Oh, Lyft is regional. I don't see them much rather. Yeah, same here. I don't see much Lyft. I see them at a concert though. Like Lyft goes to like concerts and has them like there. So Oscar Health. Hey, Adrian, doing well. How about you, man? You might do report real time. Hey, what up, Easy? So here's Oscar Health right here. One thing I love about the stock is how growthy the revenue is. Here's their annual revenue. Check out 2020. The revenue that year was $589 million. Not for the full year 2024. It's $9.18 billion. That is insane. The growth. I mean, it's up 30% after going 45, after going 43, after going 160. They're taking market share, but they're still struggling with net income positivity. As the government right now is not too happy with the Medicare and Medicaid providers for overbilling them. So they're not going to make as high margins through those loopholes anymore. So that's why UNH and CNC are tanking. But Oscar Health is one I like almost more because of how more, I think, growthier they are. So anyway, they're interesting. They're still struggling with net income positivity and might not make net income for a long time too. Someone said, what are your current positions? Yeah, hey, here are all my current positions in this portfolio right here. I have multiple portfolios, of course. Let's get to Taiwan Semi. I think they reported earnings today. Let's check out what they did. So they're only down 1.6. That's actually good because they already had such a significant rally since their last earnings report. So the fact that they're only down 1% is amazing. Let's see what they reported. So they beat on revenue. We don't have their Q3 EPS number. Is it down here? It is down here. Okay, then it doesn't matter. Let's check it out. So let's actually look. The revenue, look at that. Revenue's up 35%. So revenue's up 35, but net income is up 42. No way. They did $17 billion of after-tax net income, and you get a even if you buy the stock right now, you get a 1% yield. If you didn't know, Nvidia just designs their chips. Taiwan Semiconductor actually manufactures them in Taiwan and a little bit in US. So anyway, Taiwan's cool. What app you on? Yeah, hey, thanks, sir. Yeah, hey, by the way, Money, if you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. It's a software where you like deposit or where you buy stocks on. They'll ask you for a bunch of information and stuff. So yeah, if you want to get it though, it's in the link tree in my bio, first link there. It is an affiliate link. So if you deposit $100, we'll like both get some free stocks. Yeah, dude, KVU tanked today. If you're wondering what happened with KVU, it came out today that their baby powder causes, I don't know if I can say the cancer. So not good, not good, especially after the Tylenol stuff. So apparently Tylenol don't take while pregnant. Now their baby powder causes the C word, not good. Let's see. Can we find that news on here? That's what happened. That's why they're, yeah, here we go right here. J&J faces, and it says KVU was spun off from Johnson & Johnson. Johnson & Johnson's like up on the day. Anywho, let's go. I wouldn't buy, even before today, if this news never dropped, if this news never happened, would I own this stock? No, just because they're not that impressive. I mean, this isn't the kind of company I want to own. The sales, the lifeblood of the company, the revenue's down 4%. And again, if we zoom out, there's not much history behind this company because they just spun off from Johnson & Johnson, and Johnson & Johnson gave them way more debt than I would have liked. That's like going to take, they make no net income. If you look at the net income, so look at this quarter, they made 420 mil of net income a quarter. They're making 300 to 400 mil a quarter. They're actually not retaining any of that. Here's what I mean. So they have, as you know, a dividend, and literally the dividend cost $393 million a quarter, basically 400 mil. So the dividend cost $400 million a quarter. Yeah, they made 420 mil a quarter, but they only retained 20 million of that money. And last quarter, they couldn't afford the dividend. Last quarter, before that, couldn't afford the dividend. So they have a 5.81% yield. Like the yield looks great and everything, but what I trusted, I wouldn't. I'd be so careful. So. Hey, the Honest Company. Yeah, so here's to keep it honest with you. We looked at this one not too long ago, so I'll just be so super quick about this. So this probably won't be too helpful, and I feel bad. But here's why I don't love this one. There's a lot of YouTubers that talk about the Honest Company, but they never mention this for some reason. If you're wondering why is the stock downtrending so bad, so if you look on earnings report day, why did the stock gap down so much on earnings? It's because they're missing on growth. I mean, if you look at the sales, the revenue is only up 0.44. That doesn't beat inflation. So we just kind of want to see the growth come back to the Honest Company. Good news, they did make net income the past 2 quarters, but yeah, it's that slow growth that I think. Oh, you weren't live today. Oh, yo, I'm live right now. What's up? Wait, what do you mean? Yeah, hey, I'm good though. I appreciate you. Hey buddy, thoughts on Oracle? Hey, what up, Lopez? Let's check it out. So that's a huge cloud play. Oracle also, for everyone watching this on TikTok, Oracle now is gonna host and own the servers for all the TikTok US's data that all goes on Oracle's cloud or servers, which is kind of cool. So yeah, look at this, which is cool news. AMD and Oracle partner to deploy 50,000 AI chips, because if you didn't know, this quarter they announced that they're opening up 30 new data centers, and those data centers need chips, and so they're pumping up NVIDIA and AMD orders. So it's sending up the whole AI ecosystem. It's sending up Amphenol to the cable suppliers, to Supermicro, to the GPU installers, to Comfort Systems, who's cooling them down. So anyway, if we go to Oracle right here, they print money, easy, 2 to 3 billion, and it's just expected to kind of continue higher. Record net income expected in 2 quarters, record sales. They had some gangbuster guidance this quarter. Basically, their backlog exploded 330% year over year, completely unexpected from a big order. So anyway, would I buy them here? No, but I can see why they're doing so good. And we'll try and look at 1 or 2 more here. Then I got to run. I apologize. Do you think the J&J spinoff of KVU so they don't get you? Yeah, exactly, Steven. Yeah, Johnson & Johnson was so smart for spinning off KVU. Because look at Johnson & Johnson. They're at a new all-time high today. This has been actually one of the best performers recently. I mean, that's an insane streak for a boring... They're a dividend king. Johnson & Johnson did the right thing spinning them off. P911. Let's see if we can find that stock right here. So I can't find that one. BTE. Hey, what up, Ant Wiz? Yo, actually, we'll go do a stock portfolio update after this. So this is Baytex Energy. Let's check it out right here. So $1.7 billion company, but they trade at 6 times net income. Whoa. In 2015, they plummeted. Let's go look at their numbers here. So, yikes, the expectations aren't good. Revenue is supposed to go from $1 billion to $750 million. Yikes, a terrible decline expected. So not only are the sales already down 22%, but they're expected to fall basically another 25%. And the profits fell 57. At least they're still making profits every quarter. They're still profitable, but yeah, sales are declining and revenue's declining. That, I think, explains why the stock has done so bad. This has to be an oil and gas play. This looks just like an oil and gas stock. Yeah, it's an oil and gas stock in Canada. Oh, wait. Oh, so we were looking in Canadian currency that whole time. See, market. Yeah, US at 55%, Canada. Yeah. If you're looking for an oil and gas play or energy play, my newest play is actually MUSA. Murphy USA. This company, I kid you not, while they are still exposed, by the way, every oil and gas stock is seeing this similar decline. Look, this company's revenue is down 8% year over year, but this one I think is doing better because this company literally since 2019 has bought back 36% of all the shares. That's crazy. Hey, what up, Jim? Good to see you. Ariel said CRM long hold. Yeah, I think CRM is a long hold. Now, that being said, I wouldn't have this as a meaningful size position. I'd have it as a small position, but because the AI thesis is still hurting Salesforce, and I don't love their Agentforce product. It's almost like a ChatGPT wrapper, but let's see. Actually, this looks great. Let's check this out. Salesforce targets $60 billion in revenue by fiscal year 2030. Or full year 30. That's honestly because of their what's that called? Infosys acquisition that they spent like $10 billion on, and they also announced a $7 billion share buyback program. Salesforce and Google expand AI partnership with Gemini integration. Hey, that's good news for Google. Salesforce links security breach expands to Qantas customer data. Anyway, let's go look at their earnings. I think they reported earnings. Let me check. I don't know. But anyway, I like how diversified that they are. I love their Slack. Amazon uses Slack. So many of the S&P 500 companies use Slack. I mean, they have an irreplaceable product. The white-collar job market slows down. That'll hurt Salesforce. But look at this. 24% is services, 22% sales, platform and other, integration analytics, marketing, commerce. Revenue's up 9, but net income is up by 32. I mean, that means they're expanding net margins. They just announced a $7 billion share buyback program, 0.66% dividend yield. They're just shareholder friendly. But yeah. Porsche in Europe. Oh, it must be a different ticker symbol. Jim said grab and is this Binance? No. Heck no. So here's Grab Holdings right here. This is your international Uber play. So this company, if you're wondering what they do, they literally do exactly what Uber does, but in all these other countries. Notice the US and Canada isn't on here. Malaysia, Indonesia, Singapore, Philippines, Thailand. That's what I like about them. And also that's what Uber likes about them. Because if you go to the largest shareholder of this company, the shareholders, Uber's the largest shareholder. They own 13% of all the shares. And then Toyota Motor owns 5.5% of all the shares. So they're backed by some big names. They're making net income every quarter. They're really growthy. I mean, look at the revenue. It's $820 million. It's expected to be $950 million. They're making free cash flow every quarter. This is a commodity that has been proven to work. People like having having stuff delivered to their house and ride sharing. It's a commodity everyone needs. NAUJ, what app is this? Oh, hey, what up, man? Yeah, by the way, this is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. It is an affiliate link, full disclosure. So if you deposit $100, we'll both get some free stocks. But yeah. Oh, yeah, you can track the Pelosi tracker to Kratos. Oh, dude, actually, should we get to Kratos? Yeah, that's actually a huge government contract play. They have a small drone business as well, but Kratos Security right here. If you're wondering, why has the stock done so well? Why are they going up so much? It's because of their good numbers. Usually a stock, if you look at it, why are they doing so good? It's usually explained just by looking at what they report versus what the analysts expect. And look, the orange line's what the analysts expect. They expected 305 mil and they reported 350. No wonder they gapped up so much on earnings, because this was an insane beat on revenue. One thing I don't love is that they are still making net income every quarter. Great couple, but it's only a couple million a quarter. So I would want to see more EPS growth, but analysts are going to see that, or are expecting that. Anyway, that's good revenue growth. Their main customer is actually the government. 79% of the revenue is the government. They negotiated some nice price increases. Pretty cool. David said, I have a small position of ULTY. What are your thoughts on it? Yo, I'm going to give you my honest thoughts. This is one you want to get out of. You can't trust this one for dividend income. If you don't, not many people know this, but especially with these title trust, yield max, return of capital, NAV erosion covered call ETFs, these are the worser ones. So in my opinion, there are some better covered call ETFs like JEPI, but you don't want this one. The dividend income you receive every year goes down by 10% plus a year. So your dividend income spirals down, the stock price spirals down, and it's a slow bleed of your capital. So yeah, I don't love that one. Because yeah, you get the crazy high dividend, but again, look at the stock price. So you look at the total return, you add your dividend income plus how much you've lost, and total return, you've well underperformed the S&P. So I don't think those are worth it. You buy it to maximize your dividend income. Ooh, wait a minute. I have to go. Okay, we'll be super quick. PayPal, here's the thing with PayPal. This is a buyback play. Again, the stock is lower than it was in 2017. You bought PayPal in 2017, you're down on your position. They traded a low multiple. They're trading at 14 times net income, or PE. That's because they're not that growthy. If we go to the revenue, the sales right here, the revenue's up 5% this quarter. If we go to last quarter, the total revenue is only up 1.1. That doesn't even beat inflation. So they're just a slow single digits every quarter, 5, 1, 4, 5. These are just slow grow. But what are they doing right now? Here's what I actually like about PayPal. The huge buybacks. I mean, again, I don't know if I really expect this to outperform the S&P 500. But what I love is if you go to the cash flow statement, they literally spend every quarter over $1 billion in net income just buying back their own stock. Easily $1 billion a quarter. So here's what that does for you as a shareholder. If you look at the net income is up by 11.7. So 11 net income's up by 11. But net income per share is up by 19 because the share part of the ratio went down so much. Again, the net income growth and the EPS growth should always be the same because this is just the net income per share, but the share part of the ratio went down anyway. Cool. But we kind of just want to see the growth come back. One thing I hope PayPal can do is do some M&A. PayPal might get bought out. Northern Jays, I think PayPal should buy other companies. That's what I think they should do. I think that'd be interesting. Palantir has been good to me, almost up 9x, dude. PayPal's a beast. You deserve to be up 9x as well, because you know why? You didn't sell when you were up 2x or 3x or 4x. And that was one of my biggest regrets ever in stocks. Like Robinhood, for example. Like I sold 50 shares, in a lot more shares at a much lower price than today. I'm up I'm up 9x on Robinhood, but I only have 5 shares left. Some of my biggest regrets were selling stocks at a much lower price and not letting the winners win. So don't always trim your flowers and plant weeds. Let your winners win. Same with SoFi. I've got every share I've ever sold of SoFi. So yeah. What's your favorite stock? That's a great question. I don't know, probably McDonald's or something boring. McDonald's or Google. My largest holding, those Comfort Systems. Definitely they're a favorite because they've made me so much. But yeah, McDonald's. What app are you using? Scar, I forgot. By the way, all these apps I'm using are all in the link tree in my bio. These are all brokerages where you buy stocks on. Here's our Robinhood portfolio. Dang, we were down 1.25%. Yikes. McDonald's, look at that. McDonald's was the only green stock in there. That's why McDonald's kind of outshines whenever everything else is red. When tech is red, McDonald's is usually really green. Like this portfolio as well, we were down 2%. If you look at the very top there, we're down 2% on the day, but all time, if you go to our total open profit and loss, we're up 19% all time. We definitely underperformed. Nathan sold his ChargePoint stock. Yeah, dude, I'll show you that. I just like being transparent. Check this out right here. ChargePoint. This is one of my biggest losses. You ready for this? So here's the stock right now. It's they've obviously done a stock split adjustment, but here's where I sold all my shares. If we zoom into right here, I sold all my shares on this day right here. So on this candlestick, I sold all my shares. But guess where I bought all my shares? I kid you not. If we zoom back way up here, look at this. Here's where I was buying charge points. So that was when I lost a lot of money on it. But this also made me a bunch of money because it taught me what companies not to buy. I know whenever I bought this stock, I was like, probably a lot of y'all were, I just didn't even look at the numbers. I didn't care about financials. I saw the stock was down. Let me buy the dip. Charge point, it's electric vehicle. It's good sentiment, right? But this is what made me learn, like, I don't want to buy these kind of companies that just for the life of them just burn through hundreds of millions of net income a year. I mean, like, and not just that, but they lost all growth. Revenue's super negative. So this is the kind of company that's going to continue to go lower and lower. The revenue's down 9%. Net income, they're losing 50 to 60 mil a quarter. The whole entire company is worth 260 million. So you buy the whole company for 260 million, they lose 60 to 50 mil a quarter. It's not worth it. They're just going to continue to go lower. Anything up on the day? Let's see. We got a lot of I added oh wow, they had removed some. Okay. All stocks, dang, Beyond Meat down 22. Dang, the quantum names had their decline. What's up on the day? JB Hunt. Oh, hey, GitLab. Hey, dude, there was a Plasma, I think. He loves that one. Or maybe that's a different stock. Who knows? Okay. Rocket Lab. Let's look at that one. RKLB. So Rocket Lab, this is one of my, dude, Cal, we literally looked at PayPal 1 minute ago. So not going to look at them again, but here's Rocket Lab. This is basically my favorite space stock out there. Let's see if there's any news down here. Weekly brief. Rocket Lab expands Japanese presence with JAXA and contracts. Morgan Stanley projects strong growth for Rocket Lab, secures major contract with Synapspective for 21 new launches. Yeah, they have these launch services that they do. So if we go to the revenue right here, where does the revenue come from? 32% of the revenue comes from their launch services. And that actually just hit a new record this quarter, and they just got a bunch of new contracts. So that should help out even more. But yeah, look at that. A new record up 46 million, never been more than that before. And it's not just the launch services that are growing, but also their main business, their space systems revenue. It's up 27 after growing 94. So it's continuing that growth. They also just acquired Geost and another company. So Rocket Lab, is one that has real numbers and real assets. I love they're beating. Look, they beat on revenue this quarter, but I don't love that they're still losing 50 million in net income a quarter. But that's no big deal. They're losing 50 million in revenue. As long as they keep up this growth rate, it's no big deal. They're definitely overvalued here. I wouldn't buy them here, but I can see why they're doing so good. Have you taken CF? No. SC, definitely not. Hey, I'm not an expert, by the way. I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you. I'll never DM you. Watch out for people impersonating me. Can you do IPOs on Mumu? Yes, sir, you can. Look at FG. If you look at the very top here, it says like crypto, ETFs, options, and IPO here. Let's see. IPO, or wait, I don't know. You can for sure do it. If you give me a ticker symbol of a recent IPO, we'll look it up on there and you can buy into it. Okay. We'll probably do one or two more. Amazon will be launching thousands of satellites in the coming years. Yeah, that's what's so cool, James, about Amazon. Like, they made a lot of money with their AWS and all their other businesses. They're just so innovative. They're doing everything. You know, Amazon's a subscription play, an advertising play, an e-commerce play, a book play, a satellite play, a robotics play. They're literally an Amazon is a UPS, a Walmart, an Oracle Cloud, an Instacart all in one. I mean, Amazon's an ETF in one. It's a never sell for show. Dan said what happens is, hey, by the way, if you want to get this out, by the way, this is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, very first link there. It is an affiliate link, full disclosure. So if you deposit $100, we'll both get some free stocks. But yeah, this is my favorite brokerage. All of them are linked up there. You know, I recommend this one the most because it's the lowest fee. There's no fees at all, no commissions, a free brokerage. And a lot of people like to keep their idle cash in here like me. Because on this brokerage over here, you have to pay $5 a month for a 3.75% APY, but you don't have to pay anything. This is a free brokerage. You get a 3.85% APY. So anyway, let's keep going here. We'll look at one or two more. Can you do CG stock? Yeah, let's CG stock. Oh, Carlyle Group. Yo, I actually really like. I actually own another company called Carlyle. It's a completely different stock right here. Look at this. CSL. This is Carlyle, the roofing company, but here's Carlyle, the other one. This is like an advisory, like I don't even know how to describe it. What are asset management? Yeah, asset management. Let's see. Global private equity, global credit, consolidated funds. Well, let's see. How's their net income doing? So, yeah, dude, this is insanely good. Look at these growth rates specifically. Up 120, it's up 60, up 130. So these are insane year-over-year growth rates. They're making a couple hundred mil a quarter. The revenue is really growthy as well. The sales, the revenue's up 47 after 41 after 12. I'm actually going to add them to my watch list. And even if you buy the stock right now, you get a 2.5% dividend. Hey, what up, XTIC Physics? Hope you're having a great day. Happy Thursday. Pretty cool. So DNN, I think that's Denshin Mines. It's like a gold play. Or no, uranium play. Look, I had the ETF pulled up. So we've looked at this one before. Yeah, so look at this. This is a uranium play. A lot of the uranium names have been on fire. And this one is kept up right with the uranium ETF. It's actually done a little better than the actual uranium ETF. Let's see. They're a Canadian. They're in all the revenues in Canada. They have no revenue now, but they have a really good balance sheet. And basically what we're doing right now is the U.S. doesn't want to source the uranium from Russia and China anymore. We're trying to buy uranium source it from the U.S. and Canada. So there's your individual uranium play if you're trying to bet on one individually. So I'm better than Warren Buffett. Hey, Musey, really? What's up, dude? Um, Want to know what's funny? That's the owners of the game RuneScape. I've heard of RuneScape before. I forgot what we were talking about. Oh, Carlyle Group. Wait. Carlyle Group are the owners of RuneScape. Really? I heard that RuneScape is coming back. Like the RuneScape community right now is like all coming back right now. It just got like weirdly popular again. Like that nostalgic. Anyway, that's kind of cool. Hey, what up, Flossom? What up, Gads? Hope you're all having a great day. And Maruno, I said, good content. Keep it up. Hey, thanks so much. Yo, if you want to hit the follow button, we stream every single day. Nate said, what's your year-to-date return? Well, it depends on the portfolio. If we go to this portfolio right here, year-to-date, this one's insane. We're up 64% year-to-date when the S&P 500 is up 13% year-to-date. That's because we've just been in the right stocks. Like we bought Comfort Systems earlier this year, and in the same year, we're up 130%. Dude, Powell Industries is nearly back to an all-time high. I don't believe it. So that one's been a monster. Oh, Coca-Cola consolidated at a new multi-month high. I feel like just every stock is going right in here. Amazon stock, or Amphenol, I mean, also we bought that one during the April dip. We're up double now on that one. So also, if we go over here to Robinhood, though, here's this year-to-date return. Year to date, we are up 17.9% year to date. We also have a Roth. We have so many portfolios. We have a Roth IRA that's up 11% year to date. We also have a Weeble portfolio that's down 2% of the day, but year to date is up 29% year to date on a return money weighted basis. Here's my dividends. Hey, I just love being fully transparent. I'll go to no one shows all their portfolios like me. I try to show you every stock I own. Ask me anything if you want to see my lifetime performance, whatever. But I'm actually about to end the stream here. We'll look at one or two more. But let's see. By the way, best way to support me is just hit the follow button and subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. And if you missed anything, you can replay it. Pretty cool. Should I sell my Johnson & Johnson stock? No, I think Johnson & Johnson's a great buy and never sell company. Hey, thanks for the rose there, X-Tick. So Johnson & Johnson, you get a great yield, a 2.65% yield. And they're also a dividend king, which means they've been raising their dividends for over 50 years. Never had to cut their dividend once during 2020 or 2008. So they're very reliable. They just acquired Shockwave, which was a great acquisition. They got a steal of a deal for it. The net income's great, $6 to $7 bill a quarter. So maybe I'd trim them, but definitely wouldn't fully sell out of them. I don't expect Johnson & Johnson to outperform the S&P 500 in the long run, but I do like them. Yo, Gad said I subscribe. Hey, thanks for that. RuneScape blew up and it's more popular than ever. Really, we should go to I should look up Google Trends. Isn't there like Google search trends for RuneScape? Maybe I'll do that for fun. But let's see here. Has he done ADN? Yo, I actually have not. What up, Jose? I have not done that stock. Let's check it out. ADN, Advent Technology. So, all right, let's see here. RuneScape. Okay, actually, I don't care about that. This is that's going to take too long to pull up. So if you look at the top right, I wouldn't really. I've never heard of this one. If you look in the top right, they're only worth $11 million. We don't actually cover these kind of stocks on the stream. You know, they're only worth $11 million. It's pure speculation. It's like a flip of a coin. They're at all-time lows when the market's at all-time highs. I'd be super careful with that one. Hey, what up, Tay? And MSTY, yeah, that's this. You buy this to maximize your dividend income. Again, if we look at this one, it hit an all-time low today. Like, beware, like it's at an all-time low today. When I think Bitcoin's doing, like, you know, this sells calls on MicroStrategy. MicroStrategy just owns Bitcoin. So it's basically selling calls on Bitcoin. It's tough to trust this one in the long run. Like, you buy it to maximize your dividend income, but the dividend income's hard to trust because it falls and declines by double digits every year. So what you're making this year, you're making 10%, or so it's even worse with some of these return of capital, NAV erosion, title trust, and yield max ETFs. They're worse at it. So I don't love this one just because if you total return, like if you add in how much you've lost in stock price and then the dividend, total return, it still underperforms. Sadly, it's like a slow bleed of like your capital in the long run, especially with the 1% plus expense ratios. It's putting you really far behind. You know, like if you're trying, that underperforms the S&P 500's 8% CAGR, and you're already losing by 1% to an expense ratio fee. So it's tough to trust that in the long run sustainably. So Oh, B-Tish, I didn't know you were here. What up, dude? We'll look at this one before I get off. CDLR, Palantir. Yo, we'll look at Palantir too. Oh, we did not. Brian, yo, we'll look at CRC. Don't worry. That'll be the last one we look at, CRC. So here's Sedeller AS. So let's see what this company does. We'll convert their currency from euros to USD. It's a time charter services. Okay. Let's see. Is it back? Yeah, dude, the net income's booming, or at least this quarter. It really was 195 million. That wasn't some one-time adjustment. Like, that's the most profitable they've legit ever been. I mean, the stock ain't doing great though, just because of the industry. But whoa, did they do a merger? That has to be. I mean, look at the revenue. The revenue is up 4x. Let's see. Here's, you can tell if they did an acquisition. You go to the cash from investing activities. Yeah. So they spent 300 million this quarter, 500 million last quarter, buying something. Do I dare try and pronounce this largest shareholder here? Folk Gridon. I don't know. Okay, so yeah, that's a EU stock. That growth intrigues me. I want to figure out, like, what did they just buy? And it really made their net income pop up. Yeah, look at that huge beat. Analysts expected 107 or 170. They reported 270. So I wonder why the stock is trending down. That's weird. So Palantir. So yeah, this one's your government contract play. I mean, the government's most of the revenue. Hey, XTIG, thanks for all the roses there. I do appreciate that. So yeah, Palantir right here, government contract defense play. If we go to where the revenue comes from, 55% of it comes from the government. And check this out. The growth rate is growing. You know, the revenue's up 49, after it grew 23, after it grew 15. Like, the growth just continues over here, not just on the government revenue, but also for the commercial side. Commercial revenue's up 46 after 33 after 11. So that's just good growth. They're beating on every analyst expectation. They're expanding margins, record net margin, net income quarter, and fortress balance sheet. Palantir is legit a debt-free company with over $6 billion, cash from $4 to $6 billion year over year. So, I mean, talk about a monster company, but it's too overvalued. The multiple even right now is way, way, way too expensive. So CRC, wait. CRC. So that is California Resources. Let's check it out. They've been struggling the past couple of days here. Let's see what they do. So, it's an oil and natural gas play. I'm guessing all the revenue probably comes from California, like a utility company. Let's check out revenue here. Revenue is up. Whoa. Revenue is up 90%. That's probably from the price of natural gas. So, yeah, so revenue's up 90, and let's see the net income on that. Yeah, they're making good margins. Let's see, is that real? Yeah, so they're easily making 100 mil in net income a quarter. So, yeah. Can I analyze one more slowly? I'm so I've been going super fast because I'm rushing through these last ones here. Canada pension plan. What's the dividend on this one? The dividend is a 3.3%. So, hey, not too bad on that one. CMCSA, the Q2 net income is beast. Can you check? Yeah, hey, that's actually a one-time adjustment. Good question there, Joke. So if you look at the stock right here, Comcast, the stock hasn't done too good. If you're like, wait, why is the stock not doing too well? If we look at their net income right here, look at this. For all of eternity, they're always making $4 billion a quarter, but they made $11 billion this quarter of net income. Why isn't the stock going up? That's actually because this is why it's always important to blend the net income and the operating profit, because they didn't actually make $11 billion. It was a one-time adjustment from a tax benefit. And that's why you always look at the operating profit and the net income, because this operating profit doesn't include those one-time adjustments. But basically, the operating profit is how much the business makes. It's basically the net income before taxes and what's that called? Non-cash adjustments. So non-cash adjustments or no. Basically the net income, basically the core business operations before the one-time adjustments and taxes. So anyway, I'm losing my mind here. I gotta go. Hope you guys have a great rest of your day though. But we'll be live tomorrow this exact same time. If you want to hit the follow button, we stream every day. But sorry. By the way, if you go to the YouTube, I'm streaming on YouTube right now as well. You can replay the stream on YouTube. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But yeah, see ya. I'm so sorry for the short. Actually, this wasn't even a short stream. We streamed for over 2 hours. So hey, see you later. See you, Adrian, Lizzie, X, Watson, Mello. Brian, Looney, Professor Pumpkin. Sorry, Professor Pumpkin. I'm so sorry we didn't get to your stock. And everyone, hey, if you leave a comment on the my YouTube video, I'll always give you an analysis or look at it on the next stream. Hey, see y'all later. Thanks so much, Looney. And hey, yo, again, shout out to Matty. I don't think Maddie's still here, but again, shout out to the homie Maddie for the 25 Ron and Bob E for the $1.99 super chat. That was amazing. Hope you guys have a great rest of your day. I'll see you all